As next year, but with one key caveat. We'll hear more from that interview shortly. Matt?
Let's take a look right now at futures as we head into the open of trading. Right now, we're looking at gains. FTSE futures just barely treading water. They had been down moments ago, so a little bit of back and forth here, and really not substantial moves on the London index. The DAX, on the other hand, as well as the Euro Stoxx 50, are both rising by about 0.25%. And if you take a look at the percent misprice on your WEI screen, you can see that all equity indexes are looking like they'll open in the green this morning. There you see the FTSE opening up about 0.1%, far left-hand column here on your global macro movers screen. The IBEX in Madrid also opening to the upside about 0.3%. So we do see European markets, the DAX up 0.25%, as well the CAC 40 up 0.2%. So we do see European markets opening slightly higher. This after President Trump returned to the White House, and optimism over extra stimulus in the U.S. continued to build. Joining us now is Eleanor Taylor-Jolidan, Union Bancaire Privée co-head of Swiss and Global Equity. Eleanor, thanks for your time this morning. Let me ask what you take from this optimism that the U.S. president has recovered. He's back at the White House, and maybe a little bit more, there's a little bit more impetus to getting a stimulus package, a bipartisan stimulus package passed.
I think probably it's the stimulus package which is the most important. Mr. Trump is playing typically to the way that he does appear, and I'm delighted that he's feeling better. No one wants anybody to suffer, but what matters for equity markets is the stimulus package and the economic outlook.
Yes, I read one of our colleagues, good morning to you, Eleanor, described the stimulus as certain but uncertainly timed. Is that, do you think, the market's base case?
I would agree with that. I think that the market sees both the election as uncertain, tight, but probably not particularly important. Whichever candidate wins, there are advantages and disadvantages for either candidate winning. And I think that the stimulus package, again, it's always helpful to know that there will be an opportunity for some people to be in a better situation going forward. But that would be the more important solution short term, but one obviously which still has quite a lot of question marks over it.
How concerned are you over the once again growing cases of COVID-19 in the U.S. and in Europe, Eleanor? Is that a problem for investors?
It will be a problem for investors if it leads to further tightening measures, which would further slow the economy. It's not a surprise to me to see that we have more COVID cases at the moment. We've opened schools, which is absolutely vital for the young population of our countries. It's absolutely vital that we try and keep some economic activity going. What I take comfort from, actually, is that although we do seem to have more cases being positive, you must must remember that that comes also on the background of more testing happening than what we saw in March. And it would appear that there has been some progress also in the way that one is treating COVID. So as long as citizens continue to be responsible, as long as there's common sense, which is practiced by governments and citizens together, and that there is a unity of purpose between governments, health authorities and citizens, this is something that we can all weather together. If, on the other hand, we have measures being put in place which are difficult to understand, which are not accepted by citizens, if we have a situation which the health authorities are unable to handle, that could become more serious again.
One of the strands of fiscal stimulus, Eleanor, that's getting a lot of attention globally, and particularly in Europe from a green perspective, is spending on infrastructure. With all your years of experience watching the infrastructure space, do you expect that we will see further spending on infrastructure as a result of COVID?
In many ways, some of the pent-up demand for infrastructure was perhaps governments waiting for a really serious crisis where there would be a reason in order to spend on infrastructure in order to get people working again. So that gives me some hope that there will be, this time, some spending on infrastructure. But indeed, in the 20-plus years that I've been working on equity markets, we have been promised every year, I think, large, greater infrastructure spending, notably in areas which are clearly suffering, and it doesn't happen. I find that infrastructure happens when you really have an economy which is booming, where you have a private demand for improved infrastructure, so typically when you're building a new neighborhood, for example, as opposed to this being top-down directed. And that's what makes me a little bit more cautious on some of the cyclical sectors at the moment as to whether they truly will have that impetus coming from infrastructure, and rapid impetus, which would lead to better performances and more sustainable performances for them going forward. What I do find interesting is that should Mr. Biden be elected and should the EU projects go through, both of those projects seem to have quite a large emphasis on greener infrastructure. And that does mean that when I'm looking at infrastructure, I tend to choose companies which have more of an emphasis on renewable sustainability approaches. We've also been leaked opportunities in that space from the UK with the Conservative Party conference ongoing, and I understand that Mr. Johnson is going to be looking at wind energy and discussing wind energy in the speeches today. So that may be an interesting area to look at, but I'd be more cautious and going full out in terms of investing in the traditional beneficiaries of very large infrastructure.
All right, Eleanor, we're going to keep you with us for a little bit more of an insight into your strategy. Eleanor Taylor-Yoladon, Union Bancaire Privé co-head of Swiss and Global Equities, stays with us here on the European Market Opened. Now, Deutsche Bank remains laser-focused on executing its strategic plan, but won't rule out a merger or an acquisition. Up next, my exclusive interview with the CEO of Deutsche Bank, Christian Sewing. This is Bloomberg.
Welcome back to the European Market Open. We are 9 minutes into a trading session that shows some modest gains for European equity markets. We've got the Stocks Europe 600 moving up by 0.2%. If I pull up the sectors picture, then I get a picture of energy stocks moving to the upside along with autos. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Veolia is taking a nearly 30% stake in Suez, setting the stage for a full takeover. It's buying the holding from Engie for 3.4 billion euros. Suez remains fiercely opposed to what it calls a hostile approach and is trying to frustrate the plans. If the acquisition goes ahead, it would create a global giant in waste and environmental services. German factory orders are up for a fourth month. It's the latest sign that the country's industry-heavy economy is faring better than its services-focused peers. Demand for goods from Germany gained 4.5%, beating expectations. The rise was led by orders of investment goods from the euro area. Swedish telecoms giant Telia has agreed to sell its carrier unit to Polhem Infra in a deal worth more than $1 billion. After securing a cash injection, Telia plans to bring back the dividend payments it shelved as a result of the pandemic. Polhem Infra invests in and manages infrastructure assets. That's your Bloomberg Business Flash. Matt, Anna.
All right, Laura, thanks very much. Laura right there in London with your top business stories. Among them, Deutsche Bank remains focused on implementing its turnaround plan. That according to the CEO, Christian Saving, in an exclusive interview. He also told me about how the bank's been coping with working from home thus far and its plans to bring people back to the office.
I'm though sure that almost all CEOs are telling you that work from home and also the whole interaction during the key months of lockdowns, April, May, June, worked really well, and I'm impressed, and I really deeply appreciate the performance of our people during these months. So that went well. Also the interactions with clients. Today at the Day of the Industry here in Germany, I mean, my interaction again with our key clients show that not only Deutsche Bank is clearly back on the forefront with these clients, but also they are very impressed how reactive we were, how fast we could react and respond to their questions. That's what we need to maintain, though I'm also a big believer that while it is good to see that work from home works, I also welcome and hope that more people return to the office, because at the end of the day, generation of new ideas, collaboration, cooperation works best if people are in the office, and therefore our plan is also to bring people back.
Do you expect, though, a significant change from now on? I mean, are your bankers going to be coming to the office 3 or 4 days a week and spending a few days more a week at home with family?
Too early to judge, to be honest. Obviously, it's a huge topic. I do see that we will never come back to the kind of the environment which we have seen pre-COVID. I do think that we, at least at Deutsche Bank, we will end up in a certain hybrid model. But yes, that we will see obviously bankers returning to the bank, to the office, but that we have a more flexible approach because it proved to be working okay. And I do believe that also for some, it always depends on the underlying division the people work in. But for some, that commuted time and so on fell away, actually made the bank in this regard more efficient. In other areas, you need the exchange, the interaction of people, and therefore these people can't wait to come back. It really depends on the division, but overall, I would say Deutsche Bank will go for a hybrid model.
One of the reasons that it's exciting for investors, I think, is not just because nobody ever has to put on pants again and you get to see your kids running around, but because real estate costs so much, right? You pay so much, such a high cost for all of your office space, and travel costs must be a huge chunk of your budget every year. Do you see those costs coming down more than you previously had thought?
Yes. Clearly, COVID has shown us that there are cost reduction opportunities, which, to be fair, we didn't have in mind to such a scale like we are now thinking about. But I would also caution that the first initial reaction after 6 or 8 weeks, that we can reduce real estate by X or double digit or really massive amounts, is also wrong. We need the people also in the bank, again, for collaboration, idea generation, in particular the young people want to come back. We have graduates now coming into the bank. They need to learn, they need to talk, they need senior people training them, educating them. And therefore, I do believe the truth is in the middle, but for sure, real estate, but also travel, will provide us with incremental cost-cutting ideas.
That was the Deutsche Bank CEO, Christian Saving, speaking exclusively to us here at Bloomberg. Let's get back to Eleanor Taylor-Yoledon, Union Bancaire Privé, co-head of Swiss and Global Equity. She's still with us. Eleanor, let me start with the consolidation issue, not just in banking, but in general. We saw a big drop in M&A at the beginning, obviously, of the COVID crisis. But there's now been a resurgence, and we're starting to get more and more M&A stories every day. Do you think we're going to come back, and could COVID even boost the M&A activity that we see at the end of this year?
I think before we went into COVID, we had a situation, or we had a number of companies which did have very healthy balance sheets. And we were also in an environment where growth was already pretty scarce, to be honest. So it would have been an ideal environment to see M&A picking up. That was slightly delayed, indeed, by the pandemic. When you talk to companies individually, you say that, yes, they were looking at targets, but they were unable to conclude because it was difficult to do the last bits of the due diligence. And as Mr. Searing was saying, actually talking to people, thinking about how you can move things forward has perhaps been slightly damaged during the pandemic. And indeed, looking someone in the eye and say, let's merge, was probably also something which took a hit during the pandemic. So not a big surprise to see it coming back quite strongly at the moment. You've been mentioning European stories this morning. Obviously, we had a lot more M&A over the last few months in the US. So a pretty classic picture developing at the moment on the M&A front in view of the health of a number of companies' balance sheets and the fact that in a low growth environment, the opportunity for growth has to be inorganic, perhaps.
And I know that, Eleanor, you've been looking at one sector that we've covered M&A in recently here in Europe, and that is in the payments space. You like fintech, you like the fintech sector and some of the payments companies within that. For those who don't spend a lot of time looking at that sector, the specifics around all of the different payments businesses, which are the ones, or why do certain businesses, I suppose, stand out to you over others? If many people have credit cards and can make payments that way, why do the others make life so much easier online?
Well, certainly, if you look at fintech in general, this is a subsector which is growing at very attractive levels, both in terms of sales of around 14%. If you look at the earnings growth of this sector, you're thinking somewhere around 17%. And you're an extremely profitable sector as well. EBITDA margins are going to be in the 36% average for fintech. And that does mean that you're paying a little bit more money, certainly, for these companies in terms of PE ratios. But that is totally justified by that strong operational performance. And indeed, yes, you mentioned M&A helps, but just the growth in general, because these aren't very capitally intense companies, you've also got quite an attractive level of operational leverage on these companies. That all feeds into a very high cash flow return on investment level, which is what we particularly like as a measure of the strategic quality of a company. So indeed, Global Payments is the largest part of fintech. MasterCard is the kind of company that everybody's heard of. But indeed, if we look at M&A, we had the announcement from Nexi in Italy, which is just merging with SIA, which will create a Southern European powerhouse in terms of the payment industry, and which is very attractive, we would argue, at the moment. You mentioned on that slide a couple of names which are not necessarily in the payment space. So Guidewire, which serves as a fintech company, the insurance sector. And again, you've got a number of companies beyond that large payment sector, which are attractive in fintech, which are helping with data analysis, like a Guidewire company, for example, which are helping with customer-facing applications. We haven't been going into our local bank or our local insurance broker over the last few months, have we? And that means that they have to find a different way of reaching out to us and making their product attractive. So interesting growth, even a slightly higher growth than you've got in the general tech sector. But not all companies are equal. There are some areas of fintech that we would clearly avoid, and that's why we would always recommend an active allocation to a given sector as opposed to just buying the index, because you might have some pitfalls within that.
Got it. All right. Excellent stuff. Thanks so much for joining us this morning. Eleanor Taylor-Yoledon there, Union Bancaire Privé, co-head of Swiss and global equity. She's going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time, and I will tell you she's got some under-the-radar insight that you might want to hear about, so definitely tune in on London DAB digital radio in just about 40 minutes. 50 minutes time. Coming up, breaking up big tech. A House panel is set to propose sweeping reforms affecting giants like Amazon and Apple. We'll tell you the details next. This is Bloomberg.
Good morning, ladies and gentlemen. Hope you're okay today. You're feeling good and ready to start trading. I'm placing an order to sell short euro at 117.88. With a place to sell short at 117.88.
That is fairly flat for European stocks overall. We're down 0.2% on the FTSE 100. Be aware that US futures flat to very slightly negative this hour. Let's get a look at some of the stocks on the move this morning. Let's get to Danny Berger. Danny?
News this morning. Telia, one of the companies, the Swedish telecoms giant, trading at a March high after agreeing to sell its carrier operator. That deal comes in, gives it a little bit more than $1 billion. But part of the reason the stock is surging more than 4.5% is because it's decided with this cash injection to reinstate its dividend. Not only is it reinstating its dividend, it's getting it back to what it promised, or at least wanted, back in January before the coronavirus virus struck the company. So those shares rallying. Puma, though, to the downside. This is after Kering, the Gucci owner, decided to sell part of its stake. This is something that Kering has been doing since 2018. It's been trying to push its portfolio more up market. This time, it's selling a 5.9% stake. It's trading right now about where Kering sold it at. It still has 9.8% left, though. Finally, Premier Oil, more deal flow here, agreeing to merge with Chrysler Holdings, making one of the UK's biggest North Sea oil and gas operator. This is really positive for Premier because they've been wanting to restructure their debt for a while.
New position opened at 117.88.
Have to talk about is this takeover, or at least attempted takeover, between Veolia and Suez. Suez this morning trading at a record high after Veolia bought a 29.9% stake from Engie of Suez. Look, it's been attempting to do this for some time. Don't have the prices up quite yet, but you will see there's a big rally coming from these companies, especially Engie, because it agreed to sell its stake to Veolia because Veolia upped the offer price by 16%. So we're seeing a pretty 2.4% rally there. Suez, though, not yet trading at the 18 euros a share that Veolia has said it would try to take it over at. Certainly rallying this morning, but still there's a little bit of skepticism in the market clearly as to whether this will happen. Now, Veolia, for its part, said it would not pursue a hostile takeover, but it's unlikely that it will be not hostile because Suez itself has said that it's going to use any means at its disposal to really fight off what it calls a creeping takeover, because this really has been happening for some time. But look, Engie, which sold the stake to Suez itself, said that it wants to see a friendly merger between the companies, really echoing what we heard from Bruno Le Maire, saying that the French state wants to see a friendly deal. But again, there needs to be this really big change of heart from Suez, because despite all the offers it's been getting from Veolia, it is using, again, any means at its disposal to try to prevent that takeover. Matt, Anna?
All right, Danny, thanks very much. Danny Berger there, going through some of the big movers for some of the big stories in markets today. Up next, back to the White House. President Trump returns from the hospital and says he will be back on the campaign trail soon. He takes his mask off as soon as he gets back to the house and tells Americans not to be scared or let the coronavirus take over their lives. The next debate is scheduled for just 9 days from now, October 15th. If doctors allow it, it'll go forward, according to both sides. We'll discuss all of this and more next. This is Bloomberg.
Stop on profit for Euro USD at 117.86.
welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the trading day right now, and still looking at kind of a mixed picture in terms of the indexes, with the FTSE down, the DAX and the CAC just slightly rising. A House panel in U.S. Congress is set to propose sweeping reforms to block tech giants like Amazon and Apple from selling their own products on the marketplaces they own. That's according to a critique of the recommendations by a Republican lawmaker. If they come to pass, the reforms would be the most dramatic overhaul of competition law in decades. Joining us to explain all of this is Alex Webb, tech columnist at Bloomberg Opinion. So, Alex, why can't Apple sell? Will Apple not be able to sell its products in the Apple Store?
I think at this stage we still are really looking for what the details are going to be here. But the implication is that if you essentially can't sell products on platforms where you might have competitors, and it does appear to be the case at times that Apple at least is able to give preferential treatment to some of its own offerings, for example, Apple Music versus Spotify, for instance. And then you look at Amazon with Marketplace, it might also have the incentive to do that. It seems as though that is the kind of weak spot that this panel is targeting, and it has potentially wide-reaching implications.
And we were discussing this before the program, Alex, a little bit earlier. Good morning to you, Matt and I. And he was making the comparison with supermarkets and saying, they sell their own brand product as well as the branded stuff. And I think we've talked about this before, because I think this has been a talking point for a while. Is that a relevant comparison in this case, or not?
I mean, with due apologies to Matt, that is the kind of line you hear trotted out by Amazon's PR team. It's not quite true, because it's the equivalent of, the reality is, this is more like Amazon knowing the commercial activity of every shop on the high street, right? Walmart, in this sort of point of comparison, knowing every street shop on the high street, and therefore being able to look into what they're doing well and saying, we're going to do this, or come up with these competing products. Similar with Apple on the App Store, they are the only vector to sell apps into iPhones. Walmart is not the only way that if you are
well, but you don't have to have an iPhone. There are many other phones, right? And I mean, a lot of people don't use the iPhone apps.
Yeah, and
you can choose so many other competitors.
Fair, but that's not actually quite true, because you also have the other 50% of the market is controlled by Google. So if you look at the way that Apple has developed the iPhone, you're kind of tied into it. Now look, I'm not saying that this legislation as it's proposed is going to be, or this report is going to be the correct solution. I can see there might be a great deal of problems with it, but ultimately I think that we are at least starting to address these issues seriously, and that is something that I think is long overdue.
All right, well, I defer to you as the expert on this, Alex. And I recommend that people read your columns as well. You can check out Alex's work and the work of his colleagues by typing OPIN GO on the Bloomberg terminal.
Position closed on euro at 117.88. We got £200 in profit.
First word news now. These are the top stories from the Bloomberg terminal. For that, we go to Laura Wright. Laura?
Thanks, Matt. The coronavirus can spread through the air to people who are more than 6 feet away from an infectious person. That's the latest guidance from the CDC. The agency says this method of transmission is uncommon and happened in enclosed spaces with poor ventilation. Still, it raises new challenges for safely reopening businesses and schools. UK Prime Minister Boris Johnson will commit to boosting offshore wind power as part of his delayed green industrial revolution. That's as he seeks to get his stalled domestic agenda back on course. Speaking at the Conservative Party conference, he's set to say renewable energy can help drive the recovery. Spain may extend its emergency wage support beyond January. The nation's social security minister says Madrid is ready to reevaluate the situation, but that a lot will depend on a vaccine. An extension of the program could protect hundreds of thousands of at-risk jobs. Spain already has one of the region's highest unemployment rates. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Anna Anna, Matt.
Laura, thanks very much. Laura Wright in London. President Donald Trump returned to the White House after 3 days of hospital treatment for COVID-19. In a video released shortly after, he urged Americans not to be afraid of the virus.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We have the greatest country in the world. We're going back to work. We're going to be out front.
Joining us now, Bloomberg Senior International Editor Jody Schneider. Jody, good morning to you. What was notable then about President Trump's return to the White House? We saw a series of images of him getting there and waving to crowds, and then, of course, this released video as well.
Yeah, he seems, the president seems almost defiant about the virus, that he is, eager to get back to work, even though he is obviously has been hospitalized for several days. So we have a lot of unanswered questions about his condition. We have his physician ahead of his release saying that while the president was fit enough to go home, back to the White House, he may not be entirely out of the woods, and that further care would be provided at the White House in coming days. Within hours of him arriving, after he got there and we saw him take off his mask on the balcony there, we heard that officials were saying that there were going to be measures restricting access to the president and offering protective gear to those who do meet with him. This is intended to prevent further infections after we saw a positive coronavirus test for several key aides, including the press secretary. So we're kind of getting mixed messages here, that on the one hand, he's saying he's ready to get back to work, he's ready to be done with this, and yet others are saying they're going to have to take really protective measures at the White House.
What is his strategy here, Jody? I mean, does he seem like he's about to take the strategy of, if I beat this, so can most people, let's not worry about it and just move on?
Yeah, that does seem to be somewhat of the strategy. In what he said nobody that's a leader would not do what I did. I know there's a risk, but that's okay. I'm better, and let's move on. I've now kind of tackled this, and his campaign has actually launched something called Operation MAGA, which is Make America Great Again, to flood the campaign trail with surrogates, saying, "Hey, we're out here to do his bidding, even if he can't come out himself." But he does seem almost defiant about not staying in the hospital, not seeming to be affected by the virus, even though his physician is saying he is definitely not out of the woods. And we know that from what medical experts tell us about the regular path of the virus, that it does take more than a week, certainly sometimes several weeks, before someone can be fully recovered.
Jody, thanks very much. Bloomberg Senior International Editor Jody Schneider with the latest on the health of President Trump. Up next, we turn to something entirely different. Bugatti's $3 million car. We'll hear from Matt's interview with the CEO, Stefan Winkelmann, on how to follow up on the Chiron. This is Bloomberg.
junction. Brake, 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 brake! Lovely, thank you.
There I was last week driving the Bugatti Chiron Pure Sport, a version of the world's fastest supercar. There are currently only 250 of them in existence, and the cheapest model goes for just over $3 million. After taking that car around the track and driving around town a little bit, I spoke with the president and CEO of Bugatti, Stefan Winkelmann. I asked him about plans for a follow-up car to the Chiron.
There will be a successor for sure, but this car, I think, is still a very young car, so there are a lot of years in front of the Chiron. We are starting with a derivative strategy right now. This is, in my opinion, a supercar, and we talk about the future when the future is the present.
It's definitely a supercar, 1,500 horsepower. I've never driven anything like it. It is, though, totally an internal combustion engine. I think four turbochargers as well. But is there going to be any electrification coming for Bugatti?
You know, we had last year a lot of talks about also a second model lineup to be full electric, but a car which you use for a four-seater, which you can use on a daily basis. This was now blocked, the project, due to the coronavirus crisis. And for this car, as I said, we are not talking about what is coming next. I can tell you that the last 2 years for Bugatti were very successful. We had good economic results in 18 and also in 19. And it could be a record year despite the COVID crisis. The year 2020 is going to be maybe the best year ever.
Could be a record year. What are we talking about? Revenue? Surely you'll break the record in 2020.
If we speak about turnover and revenues or let's say economical results, I think we can be better than 19. This is quite sure. Yes.
It's fascinating because we had the lockdown, because so many people had to stay in. But of course, if you have enough money, what is this, $3.6 million for the Pure Sport?
This is 3.6 more or less net, yes.
You don't necessarily want to wait. Where are people buying them?
But we have a good balance between the main markets. So we have 1/3, which is North America, so the US and Canada. Then in Europe, the main markets are the UK, Germany, and Switzerland. But in general, the European area is covering 1/3, and then we have the rest of the world, the Middle East and Asia Pacific region.
So I wonder if you saw a pickup sooner in, for example, Asia. It seems like China bounced back from this thing almost right away. Did you see that in business figures as well?
We are not present in China with the Chiron because the car is too expensive, so the taxation would kill the price. So this is not where we are. But we are very, let's say, respondent here in Europe, faster than expected. And also in the United States, even though the situation is more critical or was critical later than in Europe, it's going quite well. So better than expected, but for sure not like we budgeted. So it would have been a wow year in any case if we wouldn't have had the COVID.
So that's just also one of the ways in which Bugatti is different than pretty much every other car maker.
Yes.
I always ask car makers about the supply chain during the crisis. And of course, Bugatti is very different with the supply chain as well. A lot of the components are in-house. A lot of the components are so high-end that they're local. But what was your supply chain like during the shutdown?
When we shut down our production, we also informed, and this was then also coming from the government, so there was a global shutdown, and we have more Europeans than overseas suppliers, so it was quite manageable, and I have to say we are pretty well on track, and we have no hiccups in the production right now.
One of the other concerns, aside from coronavirus, has been Brexit. We're quickly approaching. Do you see that having any effect on your business? Surely you have UK suppliers as well. You have, as you just mentioned, UK buyers. Do they care about any increase in taxes?
But there will be, this is going to happen next year, and we will see how the people are reacting. But at the time being, our UK market is stable, and we are prepared, and we have, if there is an increase, I think this is something which we can handle, and there will be, let's say, no reduction in the sales due to that.
And that was Bugatti President Stefan Winkelmann talking to me at the Bilsterberg racetrack. Joining us now to discuss is Oliver Zachgau, our autos reporter out of Munich. And Oliver, you know, the big impetus for me going out there to drive the car and talk to the CEO beyond the experience was there have been reports that Rimac, an Eastern European electric car maker, might buy Bugatti from Volkswagen. That would be a concern because it leaves this iconic hypercar maker with, well, not the same kind of resources you would have under such a giant like Volkswagen.
Yeah, good morning, Matt. Absolutely. It's like you said, there have been reports, not only that Volkswagen is considering selling Bugatti, but also similar reports about Lamborghini that they might IPO that business. And it's all part of this bigger strategy on Volkswagen. They want to kind of slim down their portfolio and get a lot of those higher end brands out of there to focus on the Audis, the Porsches, and the Volkswagens, obviously. But the advantage of being under Volkswagen is it's the world's largest car maker, and that comes with the kind of resources you'd expect for a company like that.
Good morning to you, Oliver. We've got other car news that we need to talk about and to look ahead to, in fact. What are we likely to hear from Daimler today? They're going to be addressing investors who want to hear a little bit more about electric plans at that car maker.
Yeah, good morning, Anna. So just like Volkswagen, Daimler is also undergoing a major restructuring, and today we're expecting to hear an update from CEO Ola Källenius on what direction the restructuring is going to take. So the important thing, I think people are going to be looking for any sort of update on the electric or hybrid model rollout, and then obviously also how the talks over job cuts are going. Remember that there's talks that almost 20,000 jobs could be on the block as they try to figure out how to deal with the coronavirus pandemic, with the shift towards electric. But those talks with unions, they're difficult, they're complicated, and there's hope that we might hear out something today. And then if there's maybe a cherry on top that investors are hoping for, might be talk about alliances with Renault and Nissan.
The hard part there is getting the job reductions past the labor union, right? Because they have an agreement, Daimler does, I believe, that they won't have any forced, firings before 2030.
Yeah, that's exactly right. So it rules out forced layoffs in Germany until 2030, but the problem is they still need to cut jobs somehow. And so what happens then is you go to the labor unions and say, this is our situation, we need to figure this out. Can we do this with buyouts? Can we do this with early retirement? How can we make sure to get our costs down and meet somewhere in the middle? And obviously the labor unions have their interest to keep those pacts intact because that's really, where their promises to workers come from. But something or someone is going to have to give, and that's what today is going to be about.
Oliver, thanks very much. Thanks for joining us. Autos reporter Oliver Zachgau with the latest on various threads, including that Daimler meeting. Then we'll look ahead to that with interest. Today, we're asking the question on our Markets Live blog: how high can yields rise amid Fed easing? How high will the Fed allow those yields to rise if we have expectations of further fiscal stimulus? We'll talk about that with Laura Cooper from our Markets Live team. That's next. This is Bloomberg. Welcome back to the European Market Open. 52 minutes into our trading session, and we've got European equity markets just on the back foot this morning. The Stock 600 down 0.2%. You can see the healthcare sector leading perhaps some of those moves to the downside. Laura Cooper, Bloomberg Markets Live macro strategist, joins us now. And Laura, actually, I want to ask you about our question of the day, because we didn't get to talk about this with Mark Cudmore at the top of the hour, and this is to do with how high yield can go on treasuries. I guess we've seen some readjustments in the market's expectations around the treasury market in the last few days, some reassessments of election prospects perhaps. That's pushed yields a little higher. What kind of answers are you getting to this question? How high can yields go? Because the Fed might not want to see them go too high.
Well, it's clear that traders are adjusting their election calculations, and that's really what's playing out in terms of this bond market sell-off, notably at the longer end of the curve. And I think that, markets are getting a bit ahead of themselves at this point, because when we look at, higher rates really lack any fundamental backing at this stage. So yes, the 10-year yields have broken out of their recent trading range, so it kind of opens up that upward momentum in terms of that 80 to 100 basis point range. But really, in order to kind of break through that 1% threshold, I think we do need some clarity in terms of the virus and how that's unfolding. And clearly that remains absent. And so I think at this stage, it's likely to be the case that if we do see these financial conditions continue to tighten, the Fed is going to potentially extend their bond purchases further out the curve. We've already seen some members allude to that. And so that ultimately does keep yields contained. But crucially, it's really just this uncertain backdrop that remains. We don't yet have stimulus. The labor market outlook is deteriorating. So all of those forces really should cap yields to the upside.
But if we do get stimulus, and it looks like the president is more apt to push for it now post COVID infection, does that mean yields continue to rise? Or are they capped in a sense by concern about the election still?
Well, I think there's a number of factors going on. I think just the fact that markets are front-running the curve steepening already, it does point to, stimulus package expectations are already largely priced in. So if we look at the 5-30-year spread, that's touching upon that 125 basis point, which has proved to be kind of that elusive cap. So I think even if we do see a stimulus package come through, it's unlikely that we're going to see kind of material upside from there. And I think ultimately, yes, the Fed is going to continue to be the backstop. Their sole objective is really to keep financial conditions loose given the uncertain economic outlook. So ultimately, I would expect them to continue to keep yields capped. And it is unlikely to be the case that we're going to see a sustained breakout in yields until we see clarity on the virus front, and that's unlikely to come until we see potentially a vaccine.
Laura, thank you very much. Laura Cooper, Bloomberg Markets Live macro strategist, joining us there with the latest on these markets. And Matt, we've got European equity markets then trading slightly to the downside, down 0.2%. The FTSE 100 weighed down a little bit by some of the GlaxoSmithKline was one of the laggards a little earlier on this morning. Interesting to look at US futures though, Matt. We've got the Nasdaq down 0.3%, a bit of concern about what the House panel may propose. We talked about this earlier with Alex Webb.
Yeah, well, we'll hear more about that throughout the day, and we'll see how that affects tech stocks that trade in the U.S. Of course, we don't have those big marketplace kind of tech stocks trading here like Google, like Apple, like Amazon, but definitely a fascinating problem that tech has on that side of the pond. Of course, they got the tax problem on this side of the pond as well. That's it for the European Open. Stay with Bloomberg Television. Up next, it's Surveillance. This is Bloomberg.
hospital, but not out of the woods. Donald Trump is discharged, but doctors strike a cautious tone about the president's health. Trump's return to the White House comes as the CDC says the coronavirus can spread indoors in the air beyond 6 feet. 34 U.S. states see more virus cases than a month ago. Plus, Deutsche Bank's chief executive tells Bloomberg it could consider M&A as early as next year. More from our exclusive interview. Well, good morning, everyone. Welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Quite a lot going on in the markets, actually quite a lot going on in the U.S. presidential race, certainly in U.S. politics, with President Trump tweeting, I think, about 25 times yesterday, not mentioning his wife, not mentioning a lot of the White House staffers that have been infected with COVID-19, and actually saying that we shouldn't worry about it. So I wonder how that will play out in the markets, but certainly it will play out, of course, in the election. Now, European stocks are actually struggling a bit for direction following yesterday's broad market advance. Again, what we're looking at is dollar pretty much steady. Other asset classes showing little movement. Copper, oil, and gold largely holding steady. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The coronavirus can spread through the air to people who are more than 6 feet away from an infectious person. That is the latest guidance from the CDC. The agency says this method of transmission is uncommon and happened in enclosed spaces with poor ventilation. Still, it raises new challenges for safely reopening businesses and schools. Meanwhile, coronavirus is spreading again across most of the U.S., and experts are warning that school reopenings and colder weather may cause the situation to deteriorate. 34 states are now seeing more cases than they did a month ago. New York City is closing schools in virus hotspots, but the fate of businesses in those areas remains unclear. Spain may extend its emergency wage support beyond January. The nation's social security minister says Madrid is ready to reevaluate the situation, but that a lot will depend on a vaccine. An extension of the program could protect hundreds of thousands of at-risk jobs. Spain already has one of the region's highest unemployment rates. And Frank Alderson is on course to join the ECB's executive board. Euro area finance ministers yesterday picked the 50-year-old supervision official. He's now the sole candidate to replace Yves Marsh, whose stint on the top policy team ends in December. Alderson's nomination means the executive board won't achieve gender balance, which may prove contentious in the European Parliament. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, President Donald Trump returned to the White House after 3 days of hospital treatment for COVID-19. In a video released shortly after, he urged Americans not to be afraid of the virus.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We have the greatest country in the world. We're going back to work. We're going to be out front.
Meanwhile, his opponent, Joe Biden, spoke out and urged the president to encourage mask use.
I would ask him to do this. Listen to the scientists. Support masks. Support a mask mandates nationwide. Require masks in every federal building and facility and interstate travel. Urge every governor and mayor to do the same. We know it saves lives. His administration just rejected a mask mandate for public transportation on Friday.
Let's get more now with our Kathleen Hunter from our politics team. The president seems to be trying to turn his own bout with COVID into a political advantage, Kat. But actually, it seems like a very risky approach because there was very little empathy for the over 200,000 deaths in the U.S.
Well, I think that is the risk. I think that when you have someone who has the advantage, as the president does, of having, world-class team of medical experts devoted to him 24/7, that is not the reality for not only most Americans, but most people on the planet. And so I think that that's the risk there, is that he, comes off as being cavalier towards a disease that's killed more than 200,000 Americans, and one that Democrats have said he's been not taking seriously enough since the very beginning. And we're already seeing Democrats making that argument since last night when Trump came out with the kind of statement that he did.
Kat, what are ongoing risks to the president's health and, of course, the health of those around him?
Well, that's a big issue, and that's also a big question mark. We know that, somewhere upwards of 10 people in Trump's inner orbit, White House staff and people that work there, have become ill with COVID-19 in the recent days. And we don't know how many more people are going to get sick. We don't know the extent to which the president's self-isolation is going to keep him out of contact with White House staff. You know, it's important to remember there's a whole staff of people beyond just the political aides that, you know, wait on the president at the White House, that, you know, do things for him and help assist him, and the First Lady at the residence. And so those people would potentially be exposed. There are Secret Service agents that could potentially be exposed. So we don't really know at this stage how deep this is going to go. And we don't also know for the president himself whether or not he's really out of the woods. His own doctor said yesterday that perhaps he isn't yet. You know, the course of this disease can be 7 to 10 days, several weeks. He's still potentially in the early stages. And so we don't know exactly what the president's health situation is going to be like a few days or a week from now either.
Kathleen, so I was going to ask you about, you know, tomorrow night's vice presidential debate, but then the president also said that he's ready to get back on the stage. So how soon could that be?
Well, I think that it's very clear from Trump's actions. We know that he, you know, really thrives off of these rallies and this, you know, the crowd scene that he, you know, that helped propel him to victory in 2016. So there's a lot of signs from Trump over the last, you know, 24 to 36 hours that he's agitating to get back out there in the final days and weeks of the campaign. I think the big question is going to be the extent to which he drives that happening versus his medical staff driving that happening, and, you know, whether, how long that in the end he's forced to wait before getting back out there. And that's very much at this stage an open question. There's also some, you know, questions surrounding tomorrow night's vice presidential debate, which you mentioned, which is obviously going to take on, you know, a higher level of import given the situation surrounding the president at this stage and his health situation. And so, you know, I think that people are going to be paying closer attention to that debate, which is going to be interesting to watch. But I also think there's going to be obviously increased safety protocols heading into that.
Kathleen, thank you so much for the update. Kathleen Hunter there from our politics team. Now joining us this morning to talk politics and impact on the markets is Trevor Greetham. He's head of multi-assets at Royal London Asset Management. Trevor, as always, thank you so much for coming on Bloomberg Surveillance. When you look at how the president has behaved so far, you know, does it have a market impact because it has an impact on the election, or is it just too soon to say?
The market impact is through the impact on the election. It's sort of a cliche to say that the markets want Trump to win because he'll cut taxes, because if you kind of analyze that, the government finances are in such a mess with COVID everywhere in the world that big tax cuts just aren't really very credible. Biden is seen as more pro-regulation, and maybe that's market negative, but really what the markets want to avoid here is a close election. They don't almost really care who wins. They don't want a close election which drags on with lots of rancor and lots of uncertainty. And actually, in that regard, the market started to firm up a little bit after the presidential debate, because the polling is now showing Biden opening up a pretty large lead. Now, how the president's illness plays into that's really hard to judge. On the one hand, obviously, if he were to become seriously ill, that's the sort of uncertainty the markets also don't want. On the other hand, it could be that there's a large sympathy vote, as sort of happened in the UK when Boris Johnson was ill, and that could result in the election becoming closer, and the markets don't really want it. So it's another layer of uncertainty on top of the uncertainty that was already there.
So, Trevor, first of all, what do you think is priced in the markets right now? And when you talk about, you know, the market not wanting a close call, are they worried about, you know, contentious election because it's too close to call, or are they actually worried about political gridlock?
I think it's more the too close to call, and a period of uncertainty as knowing who's in charge, and the sort of impact that would have, I think, on society at large in America. If you had this long, nasty dispute going on, such a polarized society at the moment. So if you kind of think back to, I think it was the 2000 election, when it wasn't until December that a final victory was announced. It could be election month rather than election week. And that's what the markets are most concerned about. And if you're trying to hedge against volatility in November, you'll find it's more expensive than December or October.
What I don't understand, Trevor, is that even if there's, you know, 2-3 days of squabbling over who won, or, you know, concerns about giving power to someone else if Joe Biden were to win too closely, this gets resolved, right? I mean, the U.S. has institutions to deal with this kind of thing, don't they?
Well, they do, but you've got a president here who's not a typical president, and he's spent a lot of time saying to his base that postal votes are fraudulent. And the very strong likelihood here is that he'll do better on the night than he will do as the postal votes come in, because most pollsters will say they'll predominantly be Democrat postal votes. So he's setting up for the situation where it may even go to a legal challenge. He may try to involve the Supreme Court. I mean, the Supreme Court's got this Republican majority. It could just be really quite messy and uncertain. And you know, in the end, it should get resolved. But markets don't like uncertainty while it's actually happening. And if it starts to create, you know, people out on the streets in American cities, for example, which could happen over weeks and weeks of uncertainty, then that would actually also impact the economy. And that's, again, where the markets come back in.
Trevor, thanks so much. Trevor Greetham there from Royal London Asset Management, of course, stays with us. Now, coming up, don't miss our coverage of tomorrow's vice presidential debate between Kamala Harris and Mike Pence. We'll have plenty more, of course, also on the president's health throughout the day. And we get the first polls after he was released from hospital yesterday. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Deutsche Bank isn't ruling out a takeover as early as next year. That's if the lender's share price recovers. But speaking exclusively to Bloomberg, CEO Christian Sabing says at the moment, M&A isn't his top priority. The turnaround is.
The focus of Deutsche Bank is clearly to finalize the transformation. I'm more than focused on this one. I would even say that we are laser focused on this one. And the success over the last 15 months, I think, prove our point that this transformation was and is the right one for the bank. And therefore, this has top priority, and there my full management attention is on.
And Veolia is taking a nearly 30% stake in Suez, setting the stage for a full takeover. It's buying the holding from Engie for 3.4 billion euros. Suez remains fiercely opposed to what it calls a hostile approach and is trying to frustrate the plans. If the acquisition goes ahead, it would create a global giant in waste and environmental services. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now let's focus in on Europe. And Spain may extend its emergency emergency wage support beyond January. The nation's social security minister says Madrid is ready to reevaluate the situation, but that a lot will depend on a vaccine. Now, an extension of a program could protect hundreds of thousands of at-risk jobs. Spain already has one of the region's highest unemployment rates. Well, still with us, Trevor Greetham from Royal London Asset Management. First of all, Trevor, when you look at the fundamentals in the economy, it does seem that overall we're seeing, or we saw a recovery that's much quicker than maybe a lot of economists were expecting, but now we're being hit by a second wave. How does that play out into your portfolio management?
Well, we've sort of described, in the alphabet soup of what shape will the recovery be, we've chosen the square root symbol. So if you imagine, there's an initial very rapid, almost vertical recovery, and then it sort of flattens out. And what we're seeing in the high frequency data, things like Google movement stats or credit card usage, is around the world, there has been this sort of glass ceiling we've hit because social distancing is still in force. And the markets don't like that sort of inflection point from rapid recovery to slower recovery. And that, coupled with the presidential election and the Brexit uncertainty kicking around, I think is why we're seeing softness in markets. And we don't quite know how the economic cycle will pan out from here. It could be quite a big retrenchment in activity if the virus really gets out of control again. So it's a bit of a wait-and-see moment for us. If we get a good dip in stock markets and sentiment gets very beaten up, we're likely to buy, because in the long run we will get through this virus. But in the short run, lots of uncertainty.
But, Trevor, what would you buy first? So, first of all, do you put Germany, France, and Italy in the same case as the UK, or do you keep the UK separate because of Brexit negotiations?
Well, I think the COVID issues are quite common across Europe, and while in the US there's no obvious re-acceleration, you could argue the US is still in its first wave. It spread from the New York to the south, and that's now kind of all over, and the numbers have remained quite high, but they aren't really accelerating. So you've definitely got the glass ceiling effect in the northern hemisphere, pretty much. Asia's doing really well out of this, and China's doing really well in terms of economic activity and low virus numbers. But I think you've got this common COVID issue. The Brexit uncertainty is probably casting a bit of a pall over the UK and over Europe, because, of course, it affects both of the trading partners quite dramatically. And I think where we'll see that expressed most is in the pound. At the moment, the pound is sort of holding steady, but I still think there's a pretty wide funnel, if you like, of possible outcomes, depending on whether we leave with the skinny deal or no deal, and if we leave with no deal, how rancorous it becomes.
Yeah, and actually, we'll get back to Brexit in a second because there's quite a lot going on just on Brexit. But Trevor, you say you buy on the dip. What kind of things do you buy? So if you look at Europe, again, it's very difficult to see really if a government truly has a handle on COVID, because they have a handle on it, 1 week, and then a month and a half afterwards, if some of the social distancing is relaxed, it could come back with a vengeance.
Yes, I mean, our favourite sector at the moment is still the technology sector. So in that sense, if you're choosing a stock market, we'd probably buy the US on the dip, because we think it will bounce back more dramatically, because that sector is so big in the US market and it's really outperforming on earnings grounds. So that makes a lot of sense to us. So the US is somewhere we would buy on a dip. We'd probably also buy emerging markets, and that's partly because, as I mentioned, the Chinese economy is doing pretty well at the moment. And depending on which way the dollar's going, if the dollar is weak in a recovery, if the dollar strengthens and then it weakens into a recovery, which we've seen recently, that dollar weakness also helps commodity prices in emerging markets. So it's really US and emerging markets we're looking to buy on dips rather than the UK and Europe.
Trevor, thanks so much. Trevor Greetham there from Royal London Asset Management stays with us because we'll talk a lot more about Brexit next. Also coming up, consolidation consideration. Deutsche Bank could consider M&A as early as next year. More from our exclusive conversation with the group's chief executive. That's coming up next, and this is Bloomberg.
transferred a material balance sheet actually from London to Frankfurt. We are also now awaiting actually what the final outcome is, and that is what you can expect from us, and you must expect from us, in particular our clients. We are fully prepared for either outcome. I believe that London is so critical and so important as a capital market location that London will always play a critical role, also for Deutsche Bank. But whatever the outcome is, which is for me hard to judge at this point in time and to assess, we are prepared.
Well, that was the Deutsche Bank Chief Executive, Christian Saving, talking about Brexit. So let's focus in more on Brexit. Still with us, Trevor Greetham from Royal London Asset Management. Trevor, so you were saying that basically, as many people say, a lot of the volatility will happen to pound. Is it too hard to, make a bet now if we have a skinny deal or if we have no deal, or whether we have a comprehensive deal?
It's very hard. I mean, we're sort of going into the tunnel now, so we maybe won't hear anything for a few days or in a couple of weeks, and you could come out the other end with a very thin free trade agreement. No transition period really. Businesses are meant to be transitioning to something known. They'll have about sort of 2 months to transition to that, or we might come out with no deal. And I think the Prime Minister has set up the communication strategy that he's happy either way. I mean, he's argued that we can make a deal if the EU makes all the movement, and that allows him to sort of say if there isn't a deal, the EU messed up and it's their fault. But my expectation is probably there will be a very thin free trade deal, something that would have been a great disappointment 3 or 4 years ago, but relative to very low expectations, and with the leader of the opposition basically saying, get Brexit done, you just need to make a deal, the bar is set really low. And if he comes back with some kind of skinny deal and gives up on a few of his red lines, people will still say, what a great deal maker. And I think that's probably what will happen, but still quite binary.
But Trevor, what does it mean for a lot of asset classes? It does seem that a lot of, certainly, a lot of the banks, but also maybe a lot of the car manufacturers just couldn't deal with the uncertainty. So they've already taken steps in the eventuality of, WTO agreements. So is there going to be much of a shock if something happens, or people pretty much ready for it?
Well, I think people then immediately ask what's next. So if we left without a deal, would we be still trying to make a deal? Would this be a new form of leverage, this period of high tariffs to focus minds? Or would the Prime Minister very quickly say, well, this is our Australia-style deal, and this is it? And given that he's sort of bigged up, the Australia-style deal and brought in a former Prime Minister as an advisor, I kind of am a bit worried that if there is no deal, the UK will say, well, that's it, that's how we're working from now on. And that creates all sorts of problems, not least with international law and with the Good Friday Agreement in Ireland and, relations with friends and neighbours. So I think there's still quite a wide spectrum of outcomes here, and the pound could weaken quite a lot in that outcome. But obviously the UK stock market's got a lot of overseas earnings, so it's hard to know which way the stock market would go.
Trevor, we'll talk again about Brexit. I know we will. Thank you so much, Trevor Greetham there from Royal London Asset Management. Coming up, we talk about President Trump and Joe Biden. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Donald Trump returned to the White House last night after 3 days of treatment for COVID-19 at a military hospital. Officials plan to significantly restrict physical access to him as he continues his recovery. In a sign of defiance on arriving back at the White House, he removed his mask and didn't appear to put it back on again as he entered the residence. Here in the UK, Prime Minister Boris Johnson will commit to boosting offshore wind power as part of his delayed green industrial revolution. That's as he seeks to get a stalled domestic agenda back on course. Speaking to the Conservative Party conference, he is set to say renewable energy can help drive the recovery. And President Trump's campaign manager says he intends to be ready to debate challenger Joe Biden next week. He also signaled the president won't agree to a moderator who is able to mute the candidate when their time has expired, saying it puts too much power in the hands of the media. The first debate descended into chaos and was marred by interruptions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, we're just getting some PMI figures, actually, for the UK. And this is something that will have an impact, certainly, on what the Bank of England does in the middle of its negative rates debate. Now, UK construction PMI for the month of September rises to 56.8. The forecast we had was 54. Now, it's not moving by much a pound, but it is moving a little bit, 129.74. Now, less than 30 days until the U.S. election, Democratic nominee Joe Biden has held on to his lead in national polls. Still, as strategists dust off their election day playbook, they remain divided on what a Biden White House could mean for markets. Well, joining us with the details is our Danny Berger. Hi, Danny.
Hi, Francine. Yeah, it's been really interesting to see this debate that's forming among strategists. Should Biden win the White House? And the main debate seems to be over what the growth picture would look like. Well, JP Morgan has come out and actually changing their call. Previously, they said to hold on to more growth names and defensive things like tech and healthcare, but they actually think that should Biden win, we will see value outperform and a shift in market leadership. They say that it's not necessarily a negative if he comes for the market. Often there's a stereotype that a Democrat president is a negative for the market, but they say a reflationary government, more stimulus, and positive news on the COVID front would all be positive. And Goldman Sachs also agreeing with them here in terms of that shift to cyclicals. JP Morgan, their last point, saying that all this better growth environment also leads to yields that start to grind higher. But Francine, that is no means the consensus. CBIC, for example, says that they see yields moving lower should Biden win the presidency. They do see yields capped at 0.5%. They think that the continued fiscal spending will help put a floor underneath them, but they think that additional taxes will hurt the growth environment and also hurt stocks as well. So really taking a different side to this argument than we've heard from JP Morgan.
Danny, are markets actually pricing a win for either candidate?
Francine, we have seen more of a shift towards perhaps a Biden presidency. Look, it's really not clear either way. But one interesting point I think was made on, our markets gravitating towards Biden comes from Steve Englander of Standard Chartered. And it's not necessarily that they're pricing in the markets or growth picture to improve with Biden, but they're saying it just seems like a more decisive victory for Biden. As the old cliche goes, markets hate uncertainty. So if it does seem like Biden will have a sizable win, if there won't be a contested election, that means volatility will come down post-election. And we have seen some of the FX volatility surrounding those November dates have started to drop. So Steve Englander points to that and says, look, markets are starting to price this in, but should President Trump recover quickly, should his campaign act smartly, that poll differential between Trump and Biden could start to narrow. And should we see that narrowing, volatility markets will pick up, Francine.
Danny, thank you so much. Our Danny Berger, they're looking at the market impact on what exactly the polls tell us for the moment. Now, Deutsche Bank could consider a merger or acquisition as early as next year if its profitability and share price recover. But its chief executive, Christian Sewing, told our Matt Miller exclusively that for now the bank remains focused on implementing its turnaround plan.
We see actually an increasing domestic deals, not yet cross-border, because things like capital market union, banking union is kind of still progressing, not there where it should be before you come to these deals. And yes, COVID for sure accelerated certain developments also in the banking industry. Scale is an issue. We always said in retail banking, scale is in particular an issue. Therefore, we decided to fully integrate Postbank 2 or 3 years ago, where we are well underway. And that's happening in other countries too, but it's domestic so far. Consolidation will come in Europe, but cross-border, I would say, still needs some time.
Every time I talk to a bank CEO, they tell me banking union just isn't there yet. They're not ready at the European Union level. But whenever I talk to EU leaders, they always say CEOs are free to do cross-border deals. Which shoe has to drop first?
Well, both are right? I mean, yes, we are free to do cross-border deals, but if the regulatory headwind and also certain restrictions are still there, that, for instance, the kind of free float of liquidity or capital is not there to a degree which really makes such a merger reasonable and constructive, then obviously something still needs to happen. So I think we need to wait for further developments, but I also know that regulators, that also governments well understand this issue. I'm confident that we will see progress on the banking union side, on the capital markets union side. I know that the German finance minister is working hard on this, so that will come, but for the time being, my view is that you rather see more domestic mergers before cross-border mergers are happening.
And of course, you've got enough on your plate already. You've got the most audacious transformation plan the bank has seen, Deutsche Bank has seen in decades. Does that mean you rule out for now any acquisitions?
Look, the focus of Deutsche Bank is clearly to finalize the transformation. I'm more than focused on this one. I would even say that we are laser focused on this one. And the success over the last 15 months, I think, prove our point that this transformation was and is the right one for the bank. And therefore, this has top priority, and there my full management attention is on.
But what does that mean exactly? I mean, when's this transformation going to be at a point when you can finally start to consider some bigger deals?
Well, first of all, we always said that 2019 and 2020 are the kind of the key years, or the 6 hot quarters, the second half of 2019 and the full year 2020, where we really have to focus full on transformation. Look, after the end of the second quarter, we had 75% of our transformation costs already booked, and we made good progress in Q3. So in this regard, 2019 and 2020 is the key of the transformation. Of course, with certain items still to come in 21, our key financial targets we have announced for the end of the year 2022. So it is a 3 to 4 year transformation. The first 2 years are key. So far, we have been very successful with that, and hence this management focus needs to continue.
When you look beyond that and you hear, reports in the Financial Boulevard press about Axel Weber's, dream mergers, do you think it's possible that Deutsche Bank could do a big deal, could be part of a big deal?
Again, I think in general, consolidation must happen in Europe. We need to be competitive also with the US banks, also from a size point of view. Look what they can invest and what they are investing into technology. You need a certain size for that, and therefore the general theme of consolidation is something which Europe will see. For us, it's important that we are not a junior partner to such thoughts. And that means that we first have to sustainably increase our profitability.
Well, that was the Deutsche Bank's chief executive speaking to us exclusively. Now, we're also getting some breaking news out of Christine Lagarde. The president, of course, from the ECB is giving an interview, which I think was taped, and so we're just getting some headlines now, saying the recovery is incomplete, uncertain, and uneven. Madame Lagarde also says that she fears that containment measures will actually impact the recovery. So that was the president of the ECB, Christine Lagarde, commenting on an interview taped on Thursday. We'll have plenty more, of course, on your reaction to what Lagarde was saying. Up next, COVID-19 is making a dangerous comeback across most of the U.S., that as the CDC assesses evidence that the virus is more contagious than believed. We'll discuss that next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A House panel is seeking to break up the big tech giants, according to a Republican member who is critical of the recommendations. The panel wants to block companies from both owning marketplaces and selling their own products on them. The report was expected this week, but we're told it's been pushed back. German factory orders are up for the fourth month. It is the latest sign that the country's industry-heavy economy is faring better than its services-focused peers. Demand for goods from Germany gained 4.5%, beating expectations. The rise was led by orders of investment goods from the euro area. And Veolia is taking a nearly 30% stake in Suez, setting the stage for a full takeover. It's buying the holding from Engie for 3.4 billion euros. Suez remains fiercely opposed to what it calls a hostile approach and is trying to frustrate the plans. If the acquisition goes ahead, it would create a global giant in waste and environmental services. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, the coronavirus can spread through the air to people who are more than 6 feet away from an infectious person. That's the latest guidance from the U.S. Centers for Disease Control and Prevention. Joining us now, Sam Fazeli, Director of Research at Bloomberg Intelligence. Sam, you're a bit of an expert when it comes to everything to do with vaccinations and understanding COVID-19 better than others. Did we already know that it could linger in the air, even if people, were more than 6 feet apart?
Hi, Francine. Yes, and thanks for the kind words. Yes, we did know this, and I think this is the CDC kind of catching up a little bit. And remember that there has been a shift in the virus in terms of a mutation that has made it more infectious, i.e. once it latches on, it can get into your cells quicker and faster and spread quicker. So this is probably partly related.
Sam, give us an idea of whether you think the rules will change. I mean, there are two things. Either the rule become more stringent than what we have now, which is, you have to socially distance. If you're not socially distanced by 6 feet, you have to wear a mask. You have to wear a mask also indoors. And that seems to be the template of, what we should be doing to keep the virus at bay, or whether the enforcement of these rules would actually be enough.
I think enforcement has to be the first key, but people's behavior is the one that you can't really control, especially in private. Even with the best will in restaurants, which have still been left open in many places, it's just not economically viable for them, for instance, to keep them that sort of distance. So I think mask wearing is the only thing you can do. And of course, don't forget, Francine, that detecting a virus in droplets more than 6 feet away is not necessarily the same as there's lots of it and you'll catch it. It's just a step forward.
Sam, are we going to see, are we going to hear from the WHO to talk more about what we've learned? It does seem like, part of the confusion is not everyone is speaking out of the same hymn page. Who do you go to really understand the breakthrough research that we have and, how we have a better understanding of the virus?
Yeah, so that's an excellent question, and I think there are many scientists who are not in the public domain, or at least visible as much as they should be. But between the WHO and the CDC, I'm afraid I'm more with the WHO, given the number of times the CDC has put something out and then retracted it and changed its mind, et cetera, et cetera. For example, testing of asymptomatics. So my faith is more in the WHO than there is in the CDC.
Sam, do most countries around the world actually follow what the WHO say? And when we hear, the President Donald Trump coming out, taking his mask off, saying not to be afraid of the virus, not even mentioning the First Lady to see if she's okay, does that mean that, authorities have to be even harder in trying to make people understand that this is a serious virus?
Yeah, sure. I mean, Francine, to a degree, you kind of answered your question there by showing that all the WHO can do is give advice, and then the governments it's up to them whether they take it. And even you've got infighting going on within countries. So the Spanish government has a view, and the Madrid governors and people who run the city have a different view and pushing back. Same in Marseille. You've got a lot of these kind of situations going on, and unfortunately, that comes down to how strict the top government wants to be.
Sam, how close are we to a vaccine that will be distributable? Are we closer now than we were 3 weeks ago, or is it still touch and go?
Every day and every week that passes, Francine, we're obviously getting that little step closer. So clinical trials continue, etc. We have seen, I've just noticed this morning, a slowdown in the recruitment into Pfizer's trial. I'm just putting a note out now, trying to come up with the possible explanations. And we don't know. I mean, it still has recruited more than 36,000 people into the trial, so it's pretty hefty. But this rapid decline in recruitment is a question mark in my mind. It's the fresh data from yesterday that was updated. So, but I think trials are ongoing, certainly in the UK. And the beauty of it all is that, of course, we're all focused on the US a lot, and a lot of the pushing, trying to get a vaccine early. The rest of the world is just letting the scientists do their job.
Sam, thank you so much. And a lot of people just saying this morning, as people wake up in the U.S., also just listen to the scientists. So Sam Fazeli, Director of Research at Bloomberg Intelligence. Now, coming up, we speak with the L'Oréal Chief Executive, Jean-Paul Agon. We'll bring you highlights from that interview next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We have the greatest country in the world. We're going back to work. We're going to be out front.
Well, that was President Trump speaking yesterday after returning to the White House after 3 days of treatment at Walter Reed Hospital for COVID. We'll bring you the latest on the president's health and, of course, how it impacts the campaign and the markets through the day here on Bloomberg TV. Now, here's what else we're watching out for today. Plenty of central bank action today at 2 p.m. London time. ECB President Christine Lagarde will take part in a video conference on economic and monetary union. Her speech comes after Euro area finance ministers picked Frank Elderson to join her team at the ECB. And at 3:30 p.m. London time, Federal Reserve Chair Jay Powell will speak at the National Association for Business Economics annual meeting 1 a.m. tomorrow, London time. The BOJ Governor Haruhiko Kuroda will also address the NABE conference. Now, we spoke exclusively with the L'Oréal Chief Executive Jean-Paul Agon about the impact of the pandemic and his business, and also what he expects from his successor. Here he is.
I'm looking for, first, I'm not looking myself. You know, there has been a process done with the nomination committee, process that started beginning of last year. Very serious, thorough process to identify the potential successes. What we were looking and what we are looking is someone who will also be able to skip this company, to skip the boat and to run this company in unpredictable times, as you said. You know, the world has become more and more VUCA, volatile, uncertain, complex, ambiguous, and you need someone who is really able to lead a company and all these fantastic teams in this kind of world.
But is that a judge of character, or is it, you know, are you looking for specific qualities, or is it, you know, what's on the CV?
Oh no, it's never on the CV, because it's you know, it's always in the situation that you display your skills. So no, it's more a question, you're right, of character, and it's a question, of course, of talents. And it's a combination of you know, intellectual, strategic, and moral and behavioral character elements. So it has to be a multifaceted.
How quickly will we have an announcement on that?
Oh, I think, yeah, pretty soon.
Would it be time for, you know, for a female chief executive, or is it something that you just want the best person?
We want, yeah, absolutely. We want the best person. So it's you know, the L'Oréal is what we call a meritocracy, and so it's only the best are promoted, and we are looking just for the best of the best. But it can be male or female, of course. Best of the best, and no gender.
Monsieur Hugon, maybe just one final question about, you know, what kind of advice you would give to he or she who takes over, given all of your experience at L'Oréal?
You know, there are many advice that I probably will give, but I think the number one is to always to be really alert, to stay alert about the changes of the world. You know, what I think has been well done at L'Oréal for 100 years is that L'Oréal was always in tune with the evolution of the world. And that's the most important thing for a company like us.
Well, that was the L'Oréal Chief Executive, Jean-Paul Hugon, speaking exclusively to Bloomberg. Now, you can catch the full interview on Leaders with Lacroix. That's coming up next month. Now, Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York. Don't miss, of course, our special coverage of this week's vice presidential debate. That's on Wednesday evening, New York time. That's Thursday morning here in London. In the meantime, we're looking a lot at what central bankers will tell us today. So we have Christine Lagarde, we have a lot of people from the European Central Bank, and then a little bit later, we also have the Bank of Japan governor. I'm looking at the markets, and there's quite a lot going on now. Most of them are trading sideways, but European stocks seem to be fluctuating. So they're retreating after the rally that we saw yesterday. If you look at treasuries, they're also gaining. Tech stocks actually leading losses in the European Stock 600. Hardware maker Logitech, for example, slumping as Apple plans to launch its own audio products and stop selling rival headphones. Treasuries rising, the dollar pretty much steady. In terms of the other things I'm watching out for, we did have an extensive conversation with Trevor Greetham about Brexit and what happens to pound. I'm also looking at investors' concerns, and I guess they're trying to figure out, you know, what signs of progress in the U.S. economic stimulus package look like. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Out of hospital, but not out of the woods. Donald Trump is discharged, but doctors strike a cautious tone about the president's health. Trump's return to the White House comes as the CDC says the coronavirus can spread indoors in the air beyond 6 feet. 34 U.S. states see more virus cases than a month ago. Plus, Deutsche Bank's chief executive tells Bloomberg it would consider M&A as early as next year. More from our exclusive interview. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keynes in New York. Tom, I have to say I watched a lot of the president's dismissal from hospital late last night, late into the London night, and I was surprised by two things. First of all, I think there were more than 25 tweets by the President of the United States, not one mentioning his wife or the other people infected with COVID-19, and then really, trying to play to his advantage of this bravado of he's beat COVID-19. So I don't know how that will play out into the polls.
For our international audience, Francine, and for you, I'll just simply say the nation has stopped to observe this. There's no other way to put it. What is interesting about it is what we're going to learn in the next 3 days. Obviously, a vice presidential debate. Our Kevin Cirilli's on top of that. But far more, we're going to find the path of this virus with the president. He says he's maybe not immune. Rumor has it he is not immune. He does have the virus. So we'll see on that. But far more, Francine, we're going to see the polling after the debate and then the polling after this illness, and that will be fascinating. That's a great unknown.
Yeah, and that will, of course, play out into how the market perceives the election on November 3rd. Less than 30 days away. Let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, President Trump's release from the hospital where he was treated for coronavirus has left unanswered questions about his condition. The White House doctor says the president may not be entirely out of the woods yet. He said that further care would be provided over the next few days. Plus, there are doubts that President Trump will abide by constraints needed to keep a virus outbreak at the White House from getting worse. President Trump intends to be ready to debate Joe Biden next week, despite just being released from the hospital. That's according to Trump campaign spokesman Tim Murtaugh. But Murtaugh says the campaign will not agree to the moderator being able to mute the candidates when their time has expired. That could prevent the kind of interruptions that marred last week's debate. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin will resume talks today on a pandemic stimulus package. There's no sign they are close to a deal. The two are trying to bridge a gap between the Democrats' $2.2 trillion proposal and the White House's $1.6 trillion offer. And British Prime Minister Boris Johnson is backing green investment as a cure for the country's coronavirus downturn. Johnson will commit to boosting the UK's offshore wind power in a speech today. In his prepared remarks, he'll say that in 10 years, offshore wind will be powering every home in the country. It's part of a delayed plan for a so-called green industrial revolution. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Thank you so much, Ritika. Now, the focus, of course, is firmly on the election in the U.S., and the focus is firmly on exactly what it means for data. As Tom suggested, it's all about the polls and the polling. If you look at European data, it's really struggling for direction. We saw a rally earlier on, and now it's kind of, fizzling out. The focus is on some of the tech stocks leading losses here in Europe. I'm looking, for example, at hardware maker Logitech slumping after Apple said it plans to launch its own audio products and stop selling rival headphones. Tom?
Two things, Francine. You see the statistical challenges that are there with a VIX 28.69, Dow 28,000 on the close, and the VIX ought to be at 25 or 23, or some would say under 20, but nevertheless is more elevated here with all the uncertainty that's out there. 28.69 on the VIX. The other thing, Francine, is there's been a seismic breakout in the bond market. Whatever anyone can say across all of full faith and credit, there's no question there are higher yields, steeple yield curves, the 2-10 spread, not a breakout, but really elevated at 62 basis points from a 50 level that we've seen. 30-year bond, 1.57% gets my attention. Francine?
Tom, President Donald Trump returning to the White House after 3 days of hospital treatment for COVID-19. We were all watching. He spoke shortly after in a video to the American people.
I stood out front. I led. Nobody that's a leader would not do what I did. And I know there's a risk, there's a danger, but that's okay. And now I'm better, and maybe I'm immune. I don't know.
Well, joining us now is Thomas Gift. He's UCL Director of Center on U.S. Politics. Thank you so much, Professor Gift, for actually joining us. First of all, I mean, it's unclear how this plays out in the polls, right? Do people support him and support the president and say, have the sympathy vote because he got COVID and got out of it? At least that's what he says. Or do people say this is reckless and he has little empathy with the many that died?
Exactly. I think that the answer to that is still to be determined. You might think that in a standard case, you would get kind of a rally around the leader effect. So everybody coming to give sympathy to the president, giving his best, the president using that opportunity to bring the together and really to suggest that it's time for all Americans to defeat this virus together. But at the same time, his own record on COVID-19, the mismanagement, the missteps, the flat-footed response from the outset, I think has complicated that narrative. The fact that he's been so insistent on belittling the virus, making light of it, making fun of those who wear masks, not necessarily taking social distancing and other safety protocols seriously at his rallies, all of that makes it a little bit more complicated. So I think we will see how the polls respond, but it's just unclear at the moment.
What are the American people asking themselves? Is there just a general worry, Thomas Gift, that if the president can't even keep himself safe, how he can keep the American people safe?
Well, that's certainly a legitimate question. I mean, Donald Trump has had access to daily testing, all of the guards and safeguards that the president is typically afforded, and yet he wasn't able to keep himself immune. Here in the UK, whenever Boris Johnson got the virus, that was one of the key messages that he delivered to British citizens and was one of the reasons why he said it's so imperative for the country to take it seriously, that if the prime minister could get it, anybody could get it, nobody's immune. We don't necessarily hear that message, though, from Donald Trump so far. He continues, I think, to downplay the virus.
Dr. Gift, out of Duke University, you have a huge, wonderful study of the behavior of elections. Caitlin Collins overnight at CNN reporting that the president was so upset about the filming of his entrance to the White House that he had it reshot with a White House photographer. Does image and theater sell in 2020? I mean, I get that he's got a core worshipful audience, all politicians do by definition, but into the rush year of 28 days, does image and theater and a reshoot sell?
I think that it does. I think that's modern politics today. So in typical Trump fashion, the president didn't miss the opportunity for majestic political theater in the video that he sent out from his Twitter feed. The campaign video, if your viewers have seen it, is kind of a homecoming. It's highly produced. He arrives off the helicopter, gives a military-style salute, takes off his mask in really dramatic fashion in front of the White House. So Trump has said that he's a wartime president battling the invisible enemy. economy. And all the imagery is very reminiscent of a triumphant wartime leader coming home after victory. So it's clear at this point how Trump is trying to frame this, both as a personal victory as well as a rally around the victory that represents the U.S. turning a corner.
Yeah, I saw it on Amazon Prime, episode 2, season 3. Dr. Gift, what I want to know here is which marginal voter is he attracting? I mean, I get he has a core constituency of whatever the percentage is. If I give the wrong number, I'll get a lot of hate mail. Wait, I get a lot of hate mail anyways. But Dr. Gift, where's his marginal aspiration right now?
Well, Tom, I have to tell you, I don't think that he is aspiring to convince moderate voters. Donald Trump is really the first modern president who hasn't tried to extend his key circle of support. In fact, he has just doubled down on trying to motivate his base, ensure that the 30 to 40% of voters, I'll put a number out there, come out to the polls who already support him. And in fact, that may make sense at this point, because if you look at the data, the number of swing voters who are available right now is relatively small. It's only about 10% of the American population, and probably a good percent of those lean one direction or the other. That's very unlike 2016, where there were a lot more undecideds. So I think at this point, Donald Trump's strategy is essentially to just double down and mobilize his base.
But Thomas Gift, does he win an election that way by just mobilizing in base? And let's remember, I mean, from what we know, the president is still infectious.
Exactly. I think the poll numbers suggest right now that it's going to be very difficult for him to do that just by doubling down on his base. You know, I think pre-COVID, that was plausible because he would get the 30 to 40% of Republicans who were going to come out for him no matter what. Then he was hoping some swing voters would vote for him simply because the economy was doing well. Unemployment numbers were at a record low for some demographics. But post-COVID, it's a totally different story. And a lot of Americans are kind of asking themselves the question, am I better off today than I was 4 years ago? I think a lot of them are answering no. That's one reason why Biden leads so considerably in the polls right now.
Thank you so much for joining us. Thomas Gift there, UCL, Director of Center on U.S. Politics. Now, stay with Bloomberg tomorrow night for, of course, our full coverage of the vice presidential debate. That starts at 8:30 p.m. in New York. You can also watch us for full election coverage. That's daily. We're less than 30 days away until the Americans go to the polls. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
Surveillance. Good morning, everyone. Francine Lacroix in London, Tom Keene in New York. Did you know there's a thing called markets and also finance besides all this politics we've been talking up here in a busy season?
Yeah,
Prime Minister Johnson to come up as well.
I have a question, because actually I keep on hearing from market participants that what the market is really pricing in is a no election outcome, or at least a contested election. But, you know, given the institutions that you have in the U.S., let's say a week, 2 weeks after the election, we're likely know for real who's president, even if it's contested, right?
Well, Bush-Gore was December 12th. I mean, that's sort of the modern benchmark, and I remember that clear as a bell. And that was a long period. I'll tell you, that was 4 or 5 weeks, Francine, that went on forever. But what's important here is which states are contested. And the basic idea, just from, secondary knowledge, is Florida, for example, is very organized, partly because that was a crucible of Bush-Gore. But other states, including Pennsylvania, may be less organized. So it really depends on where the contested states are in their apparatus state to state. One thing that I think a lot of people internationally don't understand is how devolved the polling is right down to the local level. I mean, it's amazing.
Yeah, I was reading about that, Tom.
Yeah.
Yeah.
We got lots more.
I mean, even so, yeah, go ahead, Tom.
Well, we got lots more to talk about on politics, and we'll continue to do that. Kevin Cirilli with us here in a bit. He is a retail banker in Germany. Christian Saving, of course, on the watch since 2018, is trying to resurrect the great challenges of Deutsche Bank. This is an interview that galvanized the financial world. Let us listen.
We see actually an increasing domestic deals, not yet cross-border, because things like capital market union, banking union is kind of still progressing, not there where it should be before you come to these deals. And yes, COVID for sure accelerated certain developments also in the banking industry. Scale is an issue. We always said in retail banking, scale is in particular an issue. Therefore, we decided to fully integrate Postbank 2 or 3 years ago, where we are well underway. And that's happening in other countries too, but it's domestic so far. Consolidation will come in Europe, but cross-border, I would say, still needs some time.
Every time I talk to a bank CEO, they tell me banking union just isn't there yet. They're not ready at the European Union level. But whenever I talk to EU leaders, they always say CEOs are free to do cross-border deals. Which shoe has to drop first?
Well, both are right? I mean, yes, we are free to do cross-border deals, but if the regulatory headwind and also certain restrictions are still there, that, for instance, the kind of free float of liquidity or capital is not there to a degree which really makes such a merger reasonable and constructive, then obviously something still needs to happen. So I think we need to wait for further developments, but I also know that regulators, that also governance well understand this issue. I'm confident that we will see progress on the banking union side, on the capital markets union side. I know that the German finance minister is working hard on this. So that will come, but for the time being, my view is that you rather see more domestic mergers before cross-border mergers are happening.
And of course, you've got enough on your plate already. You've got the most audacious transformation plan the bank has seen, Deutsche Bank has seen in decades. Does that mean you rule out for now any acquisitions?
Look, the focus of Deutsche Bank is clearly to finalize the transformation. I'm more than focused on this one. I would even say that we are laser focused on this one. And the success over the last 15 months, I think, prove our point that this transformation was and is the right one for the bank. And therefore, this has top priority, and there my full management attention is on.
But what does that mean exactly? I mean, when is this transformation going to be at a point when you can finally start to consider some bigger deals?
Well, first of all, we always said that 2019 and 2020 are the kind of the key years, or the 6 hot quarters, the second half of 2019 and the full year 2020, where we really have to focus full on transformation. Look, after the end of the second quarter, we had 75% of our transformation costs already booked, and we made good progress in Q3. So in this regard, 2019 and 2020 is the key of the transformation. Of course, with certain items still to come in 21, our key financial targets we have announced for the end of the year 2022. So it is a 3 to 4 year transformation. The first 2 years are key. So far, we have been very successful with that, and hence this management focus needs to continue.
When you look beyond that and you hear, reports in the financial boulevard press about Axel Weber's, dream mergers, do you think it's possible that Deutsche Bank could do a big deal, could be part of a big deal?
Again, I think in general, consolidation must happen in Europe. We need to be competitive also with the US banks, also from a size point of view. Look what they can invest and what they are investing into technology. You need a certain size for that, and therefore the general theme of consolidation is something which Europe will see. For us, it's important that we are not a junior partner to such thoughts. And that means that we first have to sustainably increase our profitability.
Some really interesting comments there from the Deutsche Bank chief executive speaking exclusively to our Matt Miller. What's interesting, Tom, is that you really don't know what the share price will do. So he seems to say, look, I'll go after a bank where we'll be the dominant player. A, can you really do it, even if that's your intention? And two, you still have to wait. And he said it very clearly. You still have to wait for the share price to recuperate if you're going to acquire someone else.
0.5 times book off the Bloomberg, 0.29 times book. Price to sales is 0.5, trading at roughly 75% discount to JP Morgan, which is considered, best bank in the world and all that. Francine, that was an amazing interview by Matt Miller. I mean, did he basically say they're looking at something?
They're looking at something if the share price is better and their own bank gets stronger. So, two big ifs. We'll talk a lot more about the banks with Eric Nielsen. He's UniCredit Group Chief Economist. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, let's talk about the election. Let's talk about Brexit. Let's talk about banks. We have a lot to talk about with our Eric Nielsen, UniCredit Group Chief Economist. Eric, I don't really know where to start, but it seems that, I guess, the biggest unknown, apart from, extra restrictions on the economy and a number of infections, is what happens with the U.S. election and how that translates into the U.S. economy.
Yes, I think that's exactly right, and it dominates everything we talk to clients about, right? And it's not just the election, it is the uncertainty when we know what the outcome will be, because this could be January before that happens as far as I can judge.
Eric, the state of Europe, you're a great optimist on all this. Can you give me any optimism on Europe within the disinflationary trends that I see?
Yeah, I mean, the good news is that disinflation increases the real wages, right? I mean, so in a sense, as long as it doesn't become deflationary, sort of a self-fulfilling prophecy, low inflation in the short term, meaning a couple of years or something, is not necessarily a bad thing because it raises real income. But it is a fundamental problem that I think we are starting to come a little bit more to grasp with over the last period of time. If you haven't read, I highly recommend Goodhart's and Pradhan's new book on the Great Reversal that argues this is a structural thing that is about to change over the next few years. But yeah, it's a big issue for sure.
Eric, where do you see the biggest scarring in the economy going? If you look at Europe, we keep on saying, well, Europe is becoming a lot more like Japan. But because we had the Japanese example, is there anything that we can do now to avoid that?
Yeah, so I don't really agree with this sort of Japanization kind of argument. I think there are way too many differences we can go through. But fundamentally, Europe needs another dose of some fiscal stimulus or protection of the labor market, as some of the programs that were put in place for the pandemic will expire. And there are plenty of evidence that some help or incentive to spend, for example, through temporary VAT cuts, would be very good. And then by early next year, it looks like we're going to get the big EU next generation package starting to roll money out, which is also good. So actually, I think we have quite a bit of money coming this way, and we're just waiting for the ECB also, right?
Let's come back with a longer conversation with Eric Nielsen of UniCredit. Really looking forward to this on some of these dynamics, including the real differing yield differentials in inflation dynamics across the Atlantic. In our next hour, Ambassador Harris of Morgan Stanley. This is Bloomberg. Good morning.
live coverage of the vice presidential debate. That starts on Wednesday night at 8:30 p.m. Eastern Time on Bloomberg Television and Radio.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg First Word News. President Trump says there's no reason to fear the coronavirus that has killed more than 210,000 Americans. The president has been released from the hospital where he was treated for the virus. A White House doctor says he may not be entirely out of the woods yet. The president will receive further care over the coming days. Joe Biden says President Trump brought his coronavirus infection upon himself. The Democratic presidential candidate told an NBC News town hall meeting that anyone who says that masks and social distancing don't matter is responsible for what happens to them. The president has mocked Biden for wearing masks. And the CDC says the coronavirus can spread indoors through the air beyond 6 feet. That's guidance that could pose new challenges for schools and businesses that are trying to reopen safely. The CDC's update says the virus can be spread through particles that linger in the air and affect people separated by distances that had been considered safe. The Supreme Court has reinstated a Republican-backed requirement that witnesses sign every absentee ballot in South Carolina. Democrats argue that will make it harder for thousands of people to vote. The ruling will not affect absentee ballots that have already been cast. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thanks so much. Right now, the markets are moving. Finally, the bond market breaks out. Yields higher in the United States, 0.76%. On the 10-year, 30-year bond really comes out 1.57% from a 140. That's about a 17 basis point move, maybe 16 basis point move. All you need to know if you're not familiar with that, that's a ginormous deal. Eric Nielsen does ginormous economics at UniCredit. We're thrilled that he could join us right now. Eric, there's an inflationary vector in the United States. There's a disinflationary vector in Europe. How is that expressed in the euro and in the dynamics across the Atlantic?
My guess is still that we see higher euro dollar. There are a number of reasons why the dollar is probably set for further weakening. I think there's a long-term equilibrium forces at play, but in addition, you have relative monetary policy, and you have what we at least expect to be lots of uncertainty around the election and the outcome. So, yeah, we have 128 as a forecast, but by late next year. So let's see if we get there. But I think that's the direction.
Nielsen predicting the 10 big figure move like the foreign exchange strategist. He is not. Well, we'll see. Eric Nielsen, I'm jesting, of course. How does Europe adjust to a stronger euro? I was a bit surprised at the angst of the last move higher. Were you surprised by the angst of manufacturers and political leaders over strong euro?
Yes, definitely. I mean, you're absolutely right. I mean, there are two things to say to this. First of all, over the last 5 years, the euro dollar has been between something like 105 and 125. So we are in a range that we are quite used to. Nothing particularly dramatic, really. The other thing is that at least on our estimations, the fair value has probably increased a little bit. We think it's about now 125, up from about 120 maybe a year ago. So I think fundamentally we have more investment in Europe. That's been the driver of this. So productivity should be a little bit better. So it's not really a drama, but it's kind of inconvenient for Europe, I would say, rather than a big problem.
Eric, what happens to inflation if we do get, if this stimulus that the Commission has actually promised really gets invested and gets invested quickly, maybe in some of these green projects that they've been talking about, is there a risk that inflation suddenly shoots up?
No, I don't think so, Francine. I mean, it's the idea, this sort of the old German fear that you have the ketchup bottle and you sort of pump and suddenly it all comes out on your plate. There's no real evidence of a sudden spike in inflation. I think there are two things to say. The one thing is the good hard argument over some years is probably structurally coming back. But for the next couple of years, I think the big story is relative price changes because of the pandemic and the shutdowns and the change in sectoral contributions to growth. and policies also big changes, I think, in relative prices, but not overall inflation.
Eric, what's the one thing that you would be watching out for globally? You know, are we going to see debt forgiveness for some emerging markets? Is there a narrative that we're not focused on yet that could actually change everything?
I think we will get some debt forgiveness, so it would take some time. But I don't think it's something that's going to drive markets tremendously. But it's always difficult to sort of say what is it that we haven't thought about yet. But the dominant things, as far as I can judge, would be the development in the pandemic and how the U.S. election plays out. And then, of course, after that, how U.S.-Chinese relations develop. Those are my top three for sure.
Eric, how is China linked to Europe right now? I think for most Americans, that's literally a fiction. Describe how China and their dynamics are linked to Europe.
Yeah, so China has taken over from the U.S. as the biggest export market for Germans, particularly, but also some of the smaller countries. It's not that it's been an explosion in imports, but it's just sort of the fact that the Chinese run, 6-9 months ahead of the U.S., or maybe something like this in the pandemic. So the economy is picking up more nicely, and the U.S. is tanking. So you have to have this relative sort of development. So China has sort of become increasingly important, and this is where a second Trump term, if that were to happen, really scares the hell out of European businesses, that you get into a sort of you're with us or against us, and you can't trade both ways, right? So global trade really suffers, but hopefully that we don't get to that. But this is where China really is important in the European narrative right now, I think, or in the next couple of years for that matter.
Thank you so much for joining us. Eric Nielsen there, UniCredit Group Chief Economist. Now, up next, we speak with Tim Bale, Professor of Politics at Queen Mary University of London and Deputy Director of the UK in Changing Europe. We'll talk Brexit. That's coming up next, and this is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. Tom Francine from London and New York. Tom, it's been, 39 minutes on air, and we still haven't spoken about Brexit. That's about to change because the UK Prime Minister Boris Johnson seeking ways to rebuild the UK economy that has been ravaged by coronavirus. Now, this comes as the government employment support falls away at the end of the month, and he speaks later this morning at the Conservative Party conference. Joining us now is Tim Bale, Queen Mary University of London Professor of Politics and UK in a Changing Europe Deputy Director. Tim Bale, thank you for joining us. What we understand through media reports and also through our own reporting is that Boris Johnson wants to, much like the European Union actually, say this is a period of transition because of COVID, that he'll build a stronger economy based on green principles. But how does he get around the Brexit question? How much damage, if the UK leaves without an agreement, will the economy go through?
Well, certainly if the UK leaves without an agreement, there will be some short-term disruption. There will almost certainly be queues at the border, particularly when it comes to road haulage. We will see shortages almost certainly in the shops of some goods. We will therefore see some price rises that I think consumers will notice as well. In the long term, it's more a case of growth foregone, really, than any massive immediate loss. But it will be significant simply because there will be more friction in trade between the UK and the EU with tariffs.
What does it mean, Tim Bale, on how the Chancellor and actually the Prime Minister will have to readjust this economy? Will it be tax cuts? How, if we go to WTO rules, what kind of an economic adjustment will we see in the next 2 to 3 years to keep this economy competitive?
Well, I think, that's bound up partly with the response to COVID, to be honest. There is increasing talk among Conservatives of the need somehow to, balance the books at some stage. Rishi Sunak, implied that there might be tax rises. Some people have even talked about spending cuts. I think the latter politically will be very, very difficult, partly because the Conservatives' general election win in 2019 was to some extent predicated on the end of austerity. There are some obvious tax rises that could be brought in particular, for example, on fuel duty, something that the Conservatives have prided themselves on suspending for a very long time, but probably which does need to go up, especially if they are pointing to this greener future that seems to be so much a feature of Boris Johnson's speech.
Professor Bale, Tom Keene in New York, good morning to you. I found William Hague always of interest in the Telegraph, and particularly so today, talking about the Midlands, talking about Yorkshire, talking about his past. This is a geography that the Prime Minister is speaking to try to retain. How's he doing with his new Tory prospects to the north?
Well, there's been actually quite a lot of opinion research into this very recently. It looks as if they are still prepared to give him the benefit of the doubt. But I think the point that the Prime Minister made just after the election, that these people have, as it were, loaned the Conservatives their vote rather than necessarily come over to the Conservatives permanently, is very, very important. It is going to be very important, I think, for the Conservatives over the next 2 or 3 years to show real tangible investment in those communities.
I thought Lord Hague was just great on this about how the virus and all the distractions of urban London have derailed the values and vision of this Conservative Party. Has this pandemic derailed the Prime Minister?
Well, some people would say it's derailed him in terms of his own health, and certainly in terms of the impressions that people have of his competence and his ability to actually just manage the country. He does appear to many people to be out of his depth, and that applies also to people in those seats that the Conservatives won back at the end of 2019 and need to retain. So he's got a real competence problem there as well.
Tim Bale, I keep on hearing that actually the Prime Minister could no longer be Prime Minister in next 12 months. Do you give credence to rumors out there that the Conservative Party would look to replace him?
Well, I think if we were coming nearer to an election and it were more obvious that the opposition Labour Party had begun to overtake the Conservatives in the opinion polls and the ratings of Keir Starmer, the opposition leader, were much higher than the ratings of the Prime Minister, we might well see that. I think given that there's 3 or 4 years to go before an election hoves into view, it's unlikely that they'll be panicking yet. But certainly if I were a Conservative MP looking at some of those opinion poll findings, I think I would be quite worried. And ultimately, it's very rarely issues. It's actually whether someone can win an election for the party that is the key to whether he or she can manage to retain the confidence of their colleagues in Parliament.
Professor Bell, thank you so much. Timothy Bell, Queen Mary University of London Professor of Politics, and of course with Changing Europe as their Deputy Director as well. This is going to be an interesting conversation, made more interesting by the actions of the President over the last 24 hours. We're going to get an update with Joe Grogan here of the Trump administration. This is going to be more than timely and informative. Stay with us. Futures at -8. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I would ask him to do this. Listen to the scientists. Support masks. Support a mask mandates nationwide. Require masks in every federal building and facility and interstate travel. Urge every governor and mayor to do the same. We know it saves lives. The administration just rejected a mask mandate for public transportation on Friday.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We're the greatest country in the world. We're going back. We're going back to work. We're going to be out front.
The two candidates, 28 days away to the election. And right now, with just a simple introduction, is Joseph Grogan out of William and Mary. Joe Grogan was a former assistant to President Trump as a director of domestic policy. He was given wide credit for reigniting the domestic policy debate within the administration. He is affiliated now with the USC Schaefer Center. Joe, thrilled to have you on today. I've got to ask the question, which is unfortunate. How are you doing? Were you exposed in any way with this virus?
Not from the White House. I haven't been there at the White House, nor have I seen anybody in person in the past couple weeks, but I'm out and about, and you always have to worry about it.
Right. We should do thoughtful domestic analysis, but we can't. Caitlin Collins over at CNN last night says the president is so worried about his electoral image that he reshot his entrance to the White House. This is a guy who said maybe he's immune as well. The money question this morning, Mr. Grogan, is COVID, the virus, the pandemic, and the president's treatment of it, is it a tangible issue within this election, or are we all being distracted by it?
Well, obviously, it's a tangible election. I mean, there are other issues that people need to focus on, and it shouldn't dominate every single moment of our lives. I think the president's message about not being afraid is consistent with that. There are other issues. Yesterday, the White House issued an executive order on improving mental health and substance abuse services, which we continue to have massive mental health and substance abuse problems during the COVID shutdown. They're getting worse. That's a great example of something that's not cutting through. There are all sorts of issues that are not cutting through the media maelstrom around COVID, which I do not deny that it is an exceedingly important story, but we need to put it in context with everything that's going on in the world and all the other economic issues and public health issues that are occurring.
Joe Grogan, 200,000 Americans have died because of COVID-19. If the president can't keep himself safe, if he cannot keep his staff safe, how can he keep American citizens safe?
CDC had estimated that 1.4 to 2 million Americans would die in 2020. I think that when you look at the curve bending down on mortality for those over 70, which started at the beginning of this epidemic, it was 25 to 30% mortality for those over 70. It's now in the low single digits. When you look at the mortality rate, which is terrible at 200,000, there's no question there. That is a tragedy, but it is not 1.4 to 2 million. The availability of therapeutic, the proximity of vaccines, we hope. Every day a new diagnostic comes to the fore, and we learn more and more about this virus. I do think that people need to put it in context about how tricky this virus is. We had never seen anything like this. And while Joe Biden is free to say that listen to the medical experts, I was in the meetings from the very beginning. Medical experts were flummoxed by this virus and continue to learn about it.
But Joe Grogan, we now have protocol in place that the CDC has said people should follow. Why did the White House and why did the president not follow that protocol?
Well, they followed a White House protocol which was developed with CDC. Now, there is no question we have real-world evidence that the protocol failed. The CDC protocol does not indicate that everybody should get tested every single time they go to work, and the White House had a protocol for daily testing for those people who were in proximity to the president. That should be improved. There's no question about it. They should be testing more widely. They should be using a different type of test. They should be layering testing. I think there's concern. I have concern that the Abbott test they were using wasn't good enough for that particular setting and what they were putting it through. And they probably got overconfident in the testing. And to your point, they should have been a little bit more worried about the close proximity. Some of the mask wearing should have been a bit more out there with the masks. But the fact of the matter is they had a far more stringent protocol in place than what CDC recommends, and still the virus got in.
Yeah, I was talking more about going to a fundraiser when you know that one of your closest assistants tested positive. But Joe Grogan, let me ask you this. Given the number of people that have been infected in the White House, will the president and the White House face, people suing them? Is this going to be a legal matter?
Oh, well, I don't know. I mean, people sue over everything, so I have no idea what the cause of action would be, or if they would. They may. I think the White House does need to explain the TikTok on this. I think it is somewhat troubling. when they knew people were positive, when they had confirmatory tests, and why they continued to forward. That does need to be explained, and I think it does need to be explained by the Chief of Staff, Mark Meadows, about why they continued to move forward. I do think that is something that those people are entitled to and the American people are entitled to. But I do want to say this. I mean, Joe Biden can talk about national mask mandates all he wants, but the United States is a country that's still resisting the metric system. And we have a long history of resisting national mandates. I think if you put a national mandate in place, it is a great way to get people to resist further wearing masks. I am pro-mask. I wear a mask when I go out and I'm not able to socially distant. I bring an extra mask in the car when I'm going out in case I suddenly have to go somewhere that I'm not anticipating. I'm pro-mask, but there are many things that we need to put in place.
Joe, is there anybody left in the White House to advise this guy, or is he out there alone?
He does have advisors. There is no question about it. He is not alone. You saw Mark Meadows was with him up at Walter Reed during his recent stay. He does have a lot of advisors, people giving him advice on things across the issues. Larry Kudlow continues to be there advising on national economic policy. He talks to Secretary Mnuchin every day, for instance, on the latest coronavirus stimulus package.
Joe, Joe, just because I'm running out of time, what's he need to do in the next debate? What does Mr. Trump need to do in the next debate to turn this around?
Well, a couple things. I think he needs to continue to lead with courage. He doesn't have the luxury of running the country from the basement, which is what Joe Biden has been doing and running for president. That's number one. And I think he would do better to not interrupt Biden as much. The more Joe Biden talks, the more the American people will dislike him, which is why he hasn't been out there that much. I mean, people will be reminded why they've rejected Joe Biden for president since 1988 if he continues to talk and be exposing the American people.
Mr. Grogan, of course, formerly working with President Trump and his Republican Party, 28 days to the election. Thank you so much, Joe Grogan, of course, with USC Schaefer Center as well. On the markets, it is interesting. There's been a change. Pharaoh's medicated in London. Bonds move, yields higher. Who do you want to talk to? There's no one better than Margie Patel of Wells Fargo Asset Management. Decades of experience when yield breaks out. We're really looking forward to that. Futures -8, Dow futures -19, curve steepening, 62 basis points. Oh, the humanity. Losses taken in bonds. This is Bloomberg.
what would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
This morning, finally, the bond market, it moves. Yields are higher. The curve steepens. Inflation, it's coming in this hour. Margie Patel. Can there be a stimulus? Well, for perceived double-digit unemployment, 28 days till the election. And call it, well, maybe I'm immunity as the president. He goes home. He loses the mask. His herd, well, they enjoy 12 and counting cases. Well, among the not immune are 4 assistants and advisors, 3 politicians, 2 academics, and 1 first lady. Good morning, everyone. This is Bloomberg Surveillance from New York, from London as well. Francine Lacroix. Francine, just extraordinary the news flow we've seen in the last 24 hours. Kevin Cirilli with us in a moment out in Utah for the vice presidential debate. It's going to be fascinating. What is the take from London of all that we're witnessing in Washington?
Well, Tom, you know, a lot of foreigners, really, the whole world just watches many times in disbelief for a number of reasons. First of all, there were more than 20 tweets by the president yesterday, not mentioning his staff, many of them who are sick, not mentioning the First Lady and how she was doing. Little empathy for those, frankly, that have died during COVID-19 and, you know, taking his mask off. So a lot of questions about, you know, whether he can win the election if he's just talking to his base, which he seems to be, and a lot of questions on whether the president will infect other people and, you know, who controls the president right now.
Well, we will see. And as I said earlier, folks, the polling to come will be fascinating. I don't know what we'll see today, what we'll see tomorrow and into the weekend is, well, let's get a briefing. Our first word news. Here's Ritika Gupta.
Morning, Tom, Francine. As we've been discussing, President Trump's release from the hospital where he was treated for coronavirus has left unanswered questions about his condition. The White House doctor says the president may not be entirely out of the woods yet. He said that further care would be provided over the next few days. Plus, there are doubts that President Trump will abide by constraints needed to keep a virus outbreak at the White House from getting worse. President Trump intends to be ready to debate Joe Biden next week, despite just being released from the hospital. That's according to Trump campaign spokesman Tim Myrtle. But Myrtle says the campaign will not agree to the moderator being able to mute the candidates when their time has expired. That could prevent the kind of interruptions that marred last week's debate. And House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin will resume talks today on a pandemic stimulus package. There's no sign they're close to a deal. The two are trying to bridge a gap between the Democrats' $2.2 trillion proposal and the White House's $1.6 trillion offer. British Prime Minister Boris Johnson is backing green investment as a cure for the country's coronavirus downturn. Johnson will commit to boosting the UK's offshore wind power in a speech today. In his prepared remarks, he'll say that in 10 years, offshore wind will be powering every home in the country. It's part of a delayed plan for a so-called green industrial revolution. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Hello, Ritika. Thanks so much. Equities, bonds, currencies, commodities. 2 ideas today. One is the VIX is elevated. It's really interesting to see Dow 28,000 on the close. And, you know, VIX at 28.62 is just extraordinary. The uncertainty that is out there. The other thing I'd say is bonds elevate. There's just no way around it. 1.5696 on the 30-year bond is a whole new feeling to see as well. And we have curves steepening 62 basis points. Francine?
Tom, I'm looking at European stocks, and they're really fluctuating, actually, quite a lot. So they're pulling back from this 2-week high. U.S. futures retreating after a rally yesterday when President Donald Trump left the hospital. I think there are a couple of things. I know you talked about bonds quite a lot. This is something that we need to keep an eye on. Dollar pretty much steady, but treasuries are rising. And there's a couple of things. We still don't have details about a stimulus in the U.S. Now there's talk about, some of the technology stocks in the U.S. being in the eye of the storm when it comes to what the House wants to do with them, possibly looking at extra regulation, and that is also filtering through tech stocks in Europe. Now, President Donald Trump returning to the White House after 3 days of hospital treatment for COVID-19. He spoke shortly after in a video to the American people.
I stood out front. I led. Nobody that's a leader would not do what I did. And I know there's a risk, there's a danger, but that's okay. And now I'm better, and maybe I'm immune. I don't know.
And now a 3-hour conversation with our Kevin Cirilli off of the recent events. I'm kidding. He is in Salt Lake City, the University of Utah, go Utes, for a vice presidential debate. Kevin, I'm going to suggest this is the most important vice presidential debate in history. One candidate is 74 and sick, and the other candidate is 77. How do the ages of the presidential candidates change this vice president debate?
Well, very much it's a heartbeat away from the presidency, and so that in and of itself, adding a new sense of urgency, Tom, to the vice presidential debate, which will be here tomorrow in Salt Lake City. Beyond that, we should also note the New York Times reporting that the debate commission is now considering for next week's Miami presidential debate that it be virtual. This, of course, given the developments of President Trump's health. Now, the Republicans and the president's reelection campaign are pushing back against that. Joe Biden, for his part, has said publicly within the last 24 hours that he wants to follow the doctors and that he's going to be listening to what the health officials are saying as it relates to whether or not it would be safe to have that debate next week. I will tell you this. Yesterday, I spoke with sources who said if it's safe enough for the vice presidential debate to occur here in Salt Lake tomorrow, that they feel that's a key sign that next week's debate should continue onward. Beyond that, this is a president who is struggling in the polls.
Wait a minute. The vice president candidates don't have the virus, right?
Precisely. However, that said, now, as it's been widely reported, there are several staffers as well as campaign officials on the president's reelection campaign who have been diagnosed with COVID. And so that has added another element to these debates as well.
Yeah, let me remind all of our global audience, Tom, I feel like I'm a bit of an authority on this because we had the virus in the household, is that, you're contagious a couple of days before you become sick, and then the person, if their person is infected, it takes up to 14 days to also develop symptoms. Kevin, how does that change the debate? If you look at the vice presidential debate, how will Mike Pence actually be briefed?
Well, from a practical matter, they have actually extended the amount of distance that the two candidates will be standing between from 9 feet until 12 feet. In terms of a policy matter, the contrast really is going to be striking. Vice President Mike Pence was the leader of the president's coronavirus task force. Senator Kamala Harris, of course, is someone who is not only looking to debate Mike Pence, but also arguably has a long career ahead of her on the political front. And this is a moment in the presidential race where President Trump is struggling in the polls. In the last 48 hours, there was an NBC News Wall Street Journal poll that came out that has the president at just 39% nationally compared to Biden's 53%. There was another poll that just came out, a local NBC affiliate poll in the state of Wisconsin that has him trailing by 8 to 10 percentage points. So there needs to be some type of shift in order for the president to get momentum, and the Trump campaign is hoping that shift will occur here in Salt Lake tomorrow.
Kevin, what I don't understand is, the president's bravado and actually very little empathy with the people that have died during the pandemic. Who's that message to? Does he think that by solidifying his base, he can win the election?
In terms of the president, he feels that that unifying the base, which is held with him, that is a path to re-election. His supporters would argue that he is showing strength in his recovery. His detractors would argue that he is being reckless. And so it's that debate, I think, that will come to fruition here in Salt Lake tomorrow. And mind you, we also have this economic story that is still very much occurring. We're going to hear from Fed Chair Jay Powell later today, and when he makes remarks before the NABE. It comes at a time in which Speaker Pelosi as well as Secretary Mnuchin are inching closer to a deal. Democrats holding at $2.2 trillion, the White House at $1.6 trillion.
Kevin, I can't remember if it's opposed to the Times, but one of them has a great chart of state cases. Does it matter that the virus is spread to the upper Midwest and even over to the battleground states like Wisconsin? Has that changed the Trump calculus?
Well, I think it changes the get out the vote efforts for both sides, and absolutely. I mean, just anecdotally speaking, I mean, we've seen the uptick in cases in Ohio last week where we were traveling, and absolutely, it has really raised questions on a very, this is really an important point, on a very granular level, on a local community level, about poll workers, poll volunteers, poll watchers, the apparatus that it takes to put on a local election. All of that, Tom, is incredibly local. I mean, look in New York City where they're shutting down schools in nine areas because of hotspots. I mean, this is a very local issue. And to your point precisely, with these battleground states getting these increasing cases, it's raising significant questions, and it cuts across the party lines because it really gets to a local organizational effort.
Now, Kevin Cirilli, thank you so much. Really appreciate the early morning visit. Mr. Cirilli, of course, with the vice presidential debate. This is in Salt Lake City at the University of Utah. This starts at 8:30 p.m. in New York. Look for that. Futures -10, Dow futures and -35. Yields, well, they come in a little bit after the festivities of yesterday. The 2-year in 2 basis points, 0.76%. The VIX 28.63. On Wednesday, a debate. This is Bloomberg. Good morning.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I think the economic recovery has been pretty good. In fact, it's been a little quicker than I was expecting back in June when I submitted a forecast. I had been quite nervous about there's a normal recovery where we get back to the level of where we were going into this sometime in 2022 maybe, and then we seem to have been doing better than that.
Evans of Chicago with our Michael McKee. That was very, very informative. And what I love there is the speed of change. The quicker of it is Dr. Evans said. Joining us now, expert on the quicker and the slower of it, is Margie Patel with Wells Fargo Asset Management. Margie, the quicker of bonds, where price goes down, the value of my portfolio goes down, is yields go up. How quicker are we moving right now?
Oh, I think we are still moving towards lower rates on investment-grade corporates and on high yields. I think those yields will trend lower over the next year with treasuries anchored near zero.
Well, okay, we stay at this lower regime, but the fact is we're seeing losses. At the lower bound and where we are with these yields you and I have never witnessed, I mean, how much does it take to see a real lessening of the value of a portfolio?
I think that bond portfolios are going to hold up very well. We had a spike in rates back in March when we had the financial panic after the Fed flooded the system with liquidity and the government provided unemployment benefits. We've actually seen rates fall, bond prices go up, and I think that's where they're going to stay with the outlook slightly improving.
Margie, the president of the ECB, Christine Lagarde, gave a pretty powerful interview, actually, to the Wall Street Journal. Well, she says, you know, what looked like, and I'm paraphrasing, what looked like a V-shaped recovery could actually be like a W-shaped recovery, and she really urges a lot of governments to keep on with their fiscal stimulus. Are we going to see a similar messages from Jay Powell later?
I think he's been pretty consistent about providing whatever it takes in the way of liquidity and maintaining rates at very low levels to help the economy. And I think that's really more important, perhaps, than the fiscal spending. We've seen the economy here on a firm rebound.
But I think the point that Christine Lagarde is making is that it's not really up to the central bank now. It's up to fiscal stimulus. How important is stimulus in the U.S. right now?
Well, it looks like we're on the verge of another, at least modest package, $1 trillion or so, and I think that will continue to support those parts of the economy that are still hurt, travel, leisure, and so forth, people who are steady, % that are still unemployed. But at the margin, I think it's secondary to what we're seeing in this rebound from the lower interest rates.
Margie, give us an update on the value of a dividend. I assume you have not loaded the boat on Exxon and joined that 10.5% yield, but give us an update on the desire to find dividends and dividend growth as a yield equivalent.
Well, I think actually right now dividends are quite competitive with treasuries, of course, which are basically sub 1%, and even for investment-grade corporates, which often yield less than the dividends of the same companies. So I think that dividends for the quality-oriented investor right now, a little under 2% for the Standard & Poor's, looks quite attractive compared to investment-grade corporates. And even, you know, some junk bonds that are on the verge of being called only have a yield of, say, 3%. So dividend yields are very attractive.
How do you model dividend growth then? Do you model it as a nominal GDP equivalent or something less?
No, we don't. We just look at industries, particular companies, and what falls out from the growth of that is how we look at it. But we think that with earnings picking up, that we should see at least a modest increase. And, you know, if dividends yield 2%, it won't take much in the way of capital appreciation to even equal the yields on junk bonds, which are 4 to 5.5% right now.
Margie, there seems to be a belief in the markets that the only way that dollar can go from here is down. What's the case against what's the case for a higher dollar?
Well, you know, people always seem to be negative on the dollar, and I think right now I don't see that case at all because it looks like the U.S. is leading on the rebound. We actually have stronger growth in many countries out there, and I think that even some of the developing markets in Asia, I think we're showing higher growth. So I think that economic growth with the low inflation says the dollar should remain a strong currency.
What's the one thing that, you know, we're discounting in some of the asset classes? If we do have a W-shaped recovery when it comes to economics around the world because of a second wave of infection, what does it mean for the market's assumption right now?
Well, if we had global growth materials slow down, of course, that would be negative for the markets. But China seems to have picked up pretty smartly. The U.S. is picking up. And with global easing, I think that, and even in Europe, we're seeing some signs of life. So I think that the interest rate sensitive sectors are helped. I think we're seeing inventory rebuilding, and all that says to me that it isn't going to be a W. It's going to be a gradual climb out.
Is there a value in preferred common stock shares?
Well, these days preferreds are all what we call mandatory preferreds, really hooked to the price of the common stock. And the way I do the math, I always come out that if you like the company, you should buy the common stock and not pay for that upfront cash that you get, the mirage of the higher dividend interest that you get from the preferred. Just get the common and you'll get whatever capital appreciation is there, more than from the preferred structure.
No, Margie Patel, thank you so much. Margie Patel, Wells Fargo Asset Management, greatly appreciate it here. And again, with the yields, Francine, I mean, it's just simply, there's been a move. You can say it's to the outside range, but there it is, 0.14%, 2-year, 10-year, 0.76%, and the 30-year bond really shows signs of life from a 1.41 out to 1.57 in the last few days. Finally, we get bonds to move. There's no other way to put it. Coming up next, we're going to drive forward this market conversation. Peter Scheer will join us with Academy Securities. Really looking forward to that, particularly in the short-term space, as Margie Patel would call it. Futures at -6, red and green on the screen now. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Southwest Airlines is making a last-ditch effort to avoid the first involuntary layoffs in its 49-year history. The airline will seek to cut employee compensation. CEO Gary Kelly won't receive a salary through the end of 2021, and 20% of pay cuts for senior executives will continue next year. Southwest also will ask unions for contract changes. Tricia Griffith started as a claims rep and rose through the ranks to become the CEO of Progressive, one of America's largest auto insurers. She spoke with David Rubenstein for the latest episode of The David Rubenstein Show. He asked her whether self-driving cars could hurt the business.
I don't worry about it. I mean, from a society perspective, you want to have less accidents. It's good for society. Everyone has been affected by someone who's been in an auto accident. What I think about, I don't put my head in the sand, but what I think about is timing, realistic timing. That's also one of the reasons why I think about not just executing on our current plan, but expanding and exploring other possibilities, adjacencies to grow our business.
And you can catch more of David Rubenstein's conversation with Progressive CEO tonight at 9 p.m. in New York, right here on Bloomberg Television. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thank you so much. We've done a lot of politics today, and we finally have a first poll. I usually don't quote polls. I'm not a big fan of them. 1,205 adults, the CNN SSRS poll really validates the NBC Wall Street Journal poll the other day, 57% for the Democrat and 41% for the incumbent right now. Some of the nuances in here are, of course, on COVID, Mr. Biden far outpacing the president. But this will get a splash today as well, Francine.
Yeah, Tom, so there's a couple of things. First of all, we'll look at the polls closely. Remember, with the polls, there's also a big margin of error, and we'll have polls, of course, coming in. Yeah, that could change. So, you know, it's a very fluid situation. I think that's what the market is pricing in, just the fluidity and the fact that it could be a very close race. It could be a contested race, so watch out also for the next couple of polls coming up in the next couple of hours. But certainly, this seems like a big deal. Tom, in the UK, another big deal is that, so there are Brexit negotiations. We're getting closer to that October 15th deal, or a 15th deadline. And then Boris Johnson also speaking at the Conservative Party conference. So what we're expecting him to say is that he'll focus on green energy and, of course, on renewables to transform this economy. So like many other heads of states, Boris Johnson may say COVID is an opportunity to better our economies in different ways. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're of course awaiting that speech that we've been talking about all morning from the UK Prime Minister Boris Johnson at the Conservative Party conference. We of course also await for any Brexit news as we're closer and closer to that October 15th deadline. Now, joining us here in London is Anna Edwards, Bloomberg anchor. Anna, thank you so much for joining us. So great to speak to someone in person. When you look at what we're expecting from Boris Johnson, how much of it will actually be on his handling of COVID-19 and how much of it will be on this, changing the economy post-COVID?
Yeah, well, many people in this country, just as around the world, still preoccupied with the fight against COVID-19. Boris Johnson wants to try to get back to the narrative that he thinks he was elected for back in December of last year. So as part of his Building Back Better program post-COVID, he's going to be pivoting green. He's going to be talking about wind power. We're going to be hearing from him as Saudi Arabia is to oil, the UK is to wind energy. And he wants to, the UK does have something of a leadership position in wind energy, building turbines offshore. And so he wants to sort of double down on that. And it might seem very tangential to the post-COVID fight, but there's going to be a big joblessness problem in the UK, and he does see the two as linked. He sees this as a way to create green jobs.
I mean, how's he doing generally? Is it, how much anxiousness is there from citizens that he hasn't handled COVID-19, and how will that transpire in his speech?
He's definitely been trying to change the topic of conversation to move away from the COVID-19 debacles, because there have been a series of them. There was a scandal around education over the summer, and then that's pivoted into a scandal over test and trace, the fact that some 16,000 or so records didn't get into the right spreadsheet over the weekend, which meant that there were some issues in tracking and tracing those who could have COVID-19. So there are plenty of reasons to challenge Boris Johnson at the moment. He'll be hoping that he can deflect attention away from that and put it back onto his levelling up agenda, spreading the wealth around the country and to green power.
Anna, in the United States, we have a president who has advisors falling by the wayside. There's a feeling here, whether it's correct or not, that this is a president alone. How alone is the prime minister?
Well, there are interesting parallels, aren't there? Because, of course, Boris Johnson did have coronavirus in April. He actually, since then, he's lost support quite a lot, though, from the population. If you look at the latest polling, he sort of peaked in terms of his popularity, at least for this year, during that period. But then the parallels fall short, because we were in a situation of national lockdown at that time, which is very different to where the US finds itself right now. In terms of his loneliness, I mean, it can be lonely at the top. And what's really in focus at the moment is maybe the bond or the rivalry between him and his chancellor. Rishi Sunak has proven to be pretty popular with the British people when it comes to giving out support to the economy, to companies, to furloughed workers, and to those of us who wanted to eat out in restaurants over the summer. So there is a bit of a tension there between the two, and Rishi Sunak actually slightly more popular at this point.
Well, okay. I mean, I guess that could be said of Mr. Mnuchin as well. So he's at this confab, I love that phrase, this confab of conservatives. And the difference is there isn't Jeremy Corbyn on the other side anymore. Is Mr. Starmer changed the debate by just not being Jeremy Corbyn?
Absolutely, he has. What's been interesting actually over the summer has been the things that Keir Starmer, the leader of the Labour Party, has got involved in, and the things he's chosen not to. So he's certainly been very supportive of the government's policies around COVID-19, the policies around lockdown. He's keen to not give mixed messages to the British people, so he wants to be supportive on that front. But that certain angles of a culture war that you could see may have tempted others in the Labour Party to get involved, to take on the Tory party, that Keir Starmer has just not wanted to get involved with. And so that has been an interesting dynamic to watch. But it is very different to see Boris Johnson go up against somebody like Keir Starmer, who the British people associate very different characteristics with compared to the current Prime Minister and indeed compared to Jeremy Corbyn.
Anna, when you look at some of the dynamics and debates surrounding Brexit, how much of it is actually Boris Johnson, being okay with his legacy being, I took the UK out, even if it meant going to WTO rules?
Yeah, this is very interesting, isn't it? Because he has done what he set out to do. Brexit is done in the sense that we have left the European Union. We're in transition arrangements, as we well know, until the end of this year. But he set that up as his measure of success. Of course, you don't necessarily get remembered for the things you want to be remembered for. Just ask David Cameron, who set up the referendum in the first place. But he's going to be remembered perhaps as the man who delivered Brexit, but also as the Prime Minister who had to take the country through the coronavirus test, and that is a very different test of his leadership style. And he's even acknowledged that his style perhaps doesn't necessarily lend itself naturally to this time, to this period where you need leaders to be of a certain type, perhaps, to give confidence.
So does he still have the confidence of the Conservative Party, broadly?
Yeah, I mean, there are definitely increasing numbers of dissenting voices. We saw that over the Internal Markets Bill when the UK threatened to break international law, and certain members of the Tory party were horrified that this was going to be something. Former leaders of the Conservative Party were horrified. But when you look at the numbers, he did manage to get it through. He still has an 80-seat or something majority, and so that means that we're not anywhere near an election. So in that sense, he's quite safe. And for as long as he seems to be able to deliver on other things, the levelling up agenda that he cares very much about, perhaps he doesn't have too much to worry about in terms of those backbenchers.
Anna, thank you so much. Anna Edwards there with the very latest. As we await Boris Johnson, Tom, that should start that speech very shortly at the Conservative Party. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. President Trump says there's no reason to fear the coronavirus that has killed more than 210,000 Americans. The president has been released from the hospital where he was treated for the virus. A White House doctor says he may not be entirely out of the woods yet. The president will receive further care over the coming days. Joe Biden says President Trump brought his coronavirus infection upon himself. The Democratic presidential candidate told an NBC News town hall meeting that anyone who says that masks and social distancing don't matter is responsible for what happens to them. The president has mocked Biden for wearing masks. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Thank you so much, Ritika. Now, the Prime Minister Boris Johnson speaking live at the Tory Party conference. There were quite a lot of leaks already about what the Prime Minister would say in terms of changing or reinventing the economy post-COVID-19. We're expecting him to, of course, talk a lot about renewable energy, for example, wind energy, and talking about renewable as a way of creating jobs. Here he is.
Human contact that drives the creativity of our economy. And so I want to thank you all for zooming in, and I can tell you that your government is working night and day to repel this virus, and we will succeed, just as this country has seen off every alien invader for the last 1,000 years. And we will succeed by collective effort, by following the guidance, and with the help of weekly and almost daily improvements in the medicine and the science. We will ensure that next time we meet, it will be face-to-face and cheek by jowl. And we're working for the day when life will be back to normal. Flying in a plane will be back to normal, and hairdressers will no longer look as though they're handling radioactive isotopes. And when we can go and see our loved ones in care homes. And when we no longer have to greet each other by touching elbows, as in some giant national version of the birdie dance.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should. Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London as we listen to Prime Minister Johnson speaking at the conservative confab there. I'm Tom Keene in New York. Lots going on, of course, lots of politics. Kevin Cirilli in Salt Lake City getting ready for the vice president debate tomorrow. Right now is something very spiritual. She is Carla Harris out of Jacksonville, who never said no. Starting with the Radcliffe Choral Society, she carved out a legit singing and music career, including wonderful appearances at Carnegie Hall, and in the meantime worked for Morgan Stanley. She is now vice chairman and senior client advisor. We're thrilled that Ms. Harris could join us this morning on things Wall Street, but also things of this society in America right now. Carla, is the spirit that got you out of Jacksonville to Radcliffe, is it still there?
I would have to say it's very much still here and alive and kicking, Tom. How are you this morning?
We're very good. Wonderful to have you with us. I'd like you to interpret for us what Wall Street can do to allow a nation to heal and move forward.
Yes, I'll tell you, one of the things that Wall Street can do as providers of capital is to make sure that those who don't have equal access to capital get that access. And that's one of the things we've done at Morgan Stanley. As you know, Tom, we started a multicultural innovation lab 4 years ago. And I'm so excited today because it's our demo day. So that's the big coming out day where our companies, the 9 companies that have been in the lab, will be shown to investors.
And we know that here through the acumen of Betsy Graysick looking at banking, and of course then there's Ellen Zentner, who's been killing it as well in economics. Carla Harris, I want to know what we need to do to get the mathiness of your degree in economics from Harvard. How do we get women, how do we get minorities engaged in the joys of microeconomics?
Well, I'll tell you, a lot of it is access to education, as you know, and then access to opportunities. And the entrepreneurs that are out there, it's around access to capital, because as you know, women get less than 3% of traditional VC dollars, and people of color get less than 2% or 1%, depending on your source. So I think that what we can do is to make sure that they know where the capital is and give them a fair shot. And in many cases, these entrepreneurs have already been de-risked by the time we even see them because they've had such a much tougher journey.
Carla Harris, it's 2020. Why have we been so bad at actually providing that capital to people that need it? And will 2020 really be a turning point for this?
Yeah, if I want to be constructive, I'll tell you that the reason that we've been bad at it is that people like to lean on the excuse that they can't find any. But that's one of the things that we've been trying to fix through our podcast, Access and Opportunity, is to highlight some of these great entrepreneurs and to highlight those who've already invested. Because the more you put data out there and the more you elevate the conversation, I think the more people will start to say, wait, there really is something there. And the companies that we brought into our lab have gone on to raise over $30 million after they've been in the lab, which means we have been successful in raising the level of visibility. And today we have over $54 billion that will be represented among the investors that have come to our virtual demo day.
Carla Harris, I remember speaking many years ago, actually, to Christine Lagarde, and she would go around when she was at the IMF speaking to heads of state who said, I would love to find a woman to